Well, I'm excited to have Shannon Robertson. I'm going to get this wrong. You're the executive director of AFIP and ADCO, if I'm not mistaken.
That's correct.
We've probably worked together for the last 12 or 15 years. We've done several certification classes. We've partnered with your company because you guys do a great job and you're connected. I would say even before the current marketplace in compliance, because we started, it might even be way longer than that, because your dad, which we'll talk about some, I'm sure, because Brian's always good at delving into this stuff. But we started it after Red Flags, which was 2001,
Yeah, absolutely.
25 years ago. So with that, welcome Shannon Robertson.
Thank you.
Shannon, I'll give you a little background of what we do here. And this is more so for our listeners, our viewers. But again, the car bar is a simple concept. The car bar rails against the noise in our industry. This is literally an opportunity for real car guys and gals to talk about real car issues and talk about how it affects our industry that we love so passionately and that we have adopted as our career choice, right, wrong, or indifferent. And we are here to delve into everything that is Shannon Robertson.
Okay.
Love the intro. I would suggest that there is, Steve, a couple other things I want to discuss too with Shannon here. You've got a couple other entities too that you've created and that are underneath the Shannon Robertson umbrella, not just the Association for
Here we
F&I
go.
Professionals.
You know where he's going. I don't.
I know where he's going.
Well, I would hope so. I would hope Shannon knows where we're going. You should know where we're going with this too. But I just want to touch on the fact that Lease Happy is obviously another entity, and we'll hopefully delve into that as we go forward. And of course, Dealer Resolve, in addition to AFIP. Do you mind if I call it the abbreviation?
You can
Do you
Dealer
hate
Resolve.
that?
I can't get into Lease Happy. I'm on a board for it, but everything's under hush at the moment.
I know
it's a great thing that'll happen in California in the future.
We're going to get into, and I want to say this kind of as the thesis to this, because of what obviously the Fifth Circuit decided when they ruled against the CARS rule. And when
Can I jump in?
you can, absolutely.
They did,
You're supposed to
They did
interrupt.
not rule. I always like to clarify this. They did not rule against the CARS rule. They told the FTC that they did not follow the appropriate process when putting the rule into place.
I love that.
So the rejection wasn't of the rule itself. It's the fact that if they wanted those rules to go into effect, they had to go back through the appropriate procedure for those rules to go into effect.
I love that clarification. And again, I think that's part of what we're going to discuss as we dig in, right? I think with that, and again, we're going to get into the 97 dealer groups that were given a letter by the FTC suggesting that, hey, we've got a new playing field for you guys, a new battlefield, right? And we're going to get into all that. But I think when I was making that point was I was suggesting that dealers maybe exhaled when they probably shouldn't have. And maybe some of those behaviors have lingered up until this point in receiving the letter and the FTC making some significant notifications to say, hey, guys, time to tune it up.
So I would say, I think when NADA and TADA, Texas Auto Dealers Association, when they filed their lawsuit against the FTC on the CARS Act or Vehicle Shopping Rule, I think it was one of two theories. One, I hope we win it. Two, let's push this to the Republican president era. Right? And I think there were two philosophies there. Right? Either we win it, or if not, once we have once we have a Republican president, then we have a new commissioner of the FTC. So I think there was two thought processes in battling those rules. Was hopefully we win it. If not, two, let's get to a new commissioner and see if they change the thought process.
I think that's an amazing perspective.
And I think with that said, the theory is under Republican president, we tend to see less aggressiveness from the federal government on our industry. And even more so, if we look at the Trump administration prior to the last administration, we tend to see less aggressiveness on our industry. Now, I don't know if dealers really think, hey, we have a Republican president, let's go wild. But they maybe put less of an emphasis on compliance if we don't see enforcement from the federal government.
Which is always the case, right? And unfortunately, I think it's pervasive That's what makes this so topical. We're going to dig into all that.
Yeah, the timing of you coming couldn't have been more perfect.
It couldn't have been better.
And we scheduled this a couple months ago.
Yeah, there's a lot of good stuff going on. I mean, whether we get into the California Cars Act, right? We got a whole California law that's coming out October 1st, right? So there's a lot going on right now from a regulatory environment.
Well, we certainly want to explore that too, because that would be the polar end of how far it can go. Typically, California would be the one that says, give me all the teeth.
It's a trickle-down state. That's
Yeah.
the problem. And I don't want to say problem, but that's where a lot of things start, is we have states that kind of like a California and New York. They tend to be trickle-down states. They get aggressive on a state law. Everybody watches it, sees how effective it is, and then other states choose whether they want to adopt some or part of those rules.
Even worse, they want to see the fallout, right?
They do.
I mean, unfortunately, I think that is one of those things where dealers can look at that and exhale or hold their breath and say, okay, well, at least we see the playing field.
We do. I mean, and there's a whole conversation we can get into on what causes these rule changes. I think
Yep.
at the core, what a lot of people don't think about or don't focus on is what's causing the changes.
Gotcha.
What do you think they are?
It's consumer complaints.
It should be consumer behavior.
It is.
Yeah.
At the end of the day, and I was on a Clubhouse conversation. There's an app called Clubhouse, and there's a lot of automotive people that have closed groups for car people. There's used cars, news cars, service. There's a lot of conversations that take place on the app, and I got asked to join one the other day, and it was a good conversation of just car people understanding the rule. How do we apply? How do we follow? And I don't want to say getting around the rules, but what are the gray areas? Because everybody, and this isn't unique to the auto industry. In every industry, we try to play in the gray, regardless if it's the Bill Belichick rule of coaching. Let's be clear. But
I love that.
It is. But what we forget in those conversations is what drove the change, and it's consumer complaints. And I think sometimes we get so caught up in what is the rule, where is the gray area, where do we find a competitive advantage over maybe another dealer from a marketing standpoint, that we forget that what we might be causing is consumer confusion, which leads to those complaints.
Yeah, but see, I have so much thoughts running through my head through this. Is it a prevailing problem? Meaning, are we picking the fly shit out of the pepper? Did we find one consumer complaint and somebody, I'm going to take the states you talked about, California and New York, and they go, oh my God, this happens every day all over the place. And that's not real. I've said this before, that other industries, and you referred to it as well, have their good and bad actors. And the majority in our space are pretty good actors, especially more and more that become corporate. All the ginormous dealer groups, they don't threaten their reputations in those places. They can't afford to because they have massive shareholders that hold them responsible for it. But is there overreaction? I mean, what do you think the threshold is that then somebody at a federal level starts to take action?
Well, we're in the top 3 to 4 complaint industry every year from an FTC standpoint, and we're in the bottom quartile in one of the most trusted industries.
Right.
So it's never good to be on both ends of that spectrum. And I do think there's an increase. I mean, post-COVID, there's a history of an increase of complaints on dealers on lack of transparency between online and on-site pricing. We can track that. Now, I don't like this category of good or bad dealers, right? I like people debate there's a heaven or hell, you're either good or bad, right? What about this middle ground? And I think there's this middle ground where a dealer's not good or bad. They're just fighting for competitive advantage in the market. And I think there are decisions that dealer makes that don't make them good or bad dealers. They're just trying to be competitive with how some of these systems are built for online pricing. If I do an online search for cars in my area, right, it's going to start showing me the cheapest cars. I'm going to start looking at lower prices. Yeah. So that creates that behavior. So if I'm in Florida where the dock fee is not regulated with a set amount, right, to include a dock fee in Florida where one dealer has it as $1,800 and another dealer has $900, then online I lost my competitive advantage.
Yeah, and just to be super clear, not that I'm the lawyer in the room, far from it, but in our state it was regulated several years ago. We have an admin fee, because only lawyers could charge dock fees in our state.
Correct.
So our home state, so it turned into admin fee. And nobody loves regulation. I'm not opposed to some of the stuff that they've talked about in this, and I think it's great that they're doing it. A terrible example, and you mentioned COVID, and I won't call out the dealer, but during COVID, when there was no inventory, this guy had on the line here in our market 1,500 vehicles in stock and had them all on his website. Well, there were just configurations of vehicles he could make up. And this is one of the things that this new FTC regulation is going to address. And I think that's very fair. It levels the playing field to, whether it's pricing or whatever. And I'm not a huge manufacturer fan. There's a few things they do right. I think Toyota is probably the most aggressive, and you know this more, Brian, because you worked for a Toyota dealer, of what they allow their dealers to do online.
MAP pricing was instituted when I was the GM with Riley Toyota at that time, and that was way back in the late teens. And it was created to offset and eliminate some of that discrepancy and allow customers to have a more transparent process. I don't think it's good or bad, and I'll agree, Shannon, with that differentiation, but I do believe it creates lazy dealers. And again, I don't know what the other polar opposite of that is, and it doesn't much matter. But I think what it did without regulation is it allowed dealers to be lazy. And what I mean by that is lazy with price. I think when you're lazy, you market and you tend to market to price and price alone instead of the why, buy, here's the differentiators in your market. Why would you do business with us as a particular dealership if price isn't regulated, if price isn't given the bumpers in a bowling metaphor, then you will be lazy and you will draw customer attention with price and price alone. Instead of, hey, come buy from me because I'm a legacy-owned dealership, family-owned and operated, lifetime powertrain warranty, whatever your why, buy, here's are, is what we should be marketing to draw attention from customers and get that customer behavior that we're looking for. We create lazy dealers when we don't regulate price. But we're going to get into all of that. If you want to touch on that.
Well, there's a dealer group down so I home base out of Fort Worth, Texas, and there's a dealer group down there that never advertises vehicles and pricing.
Yeah.
And they're one of the most dominant family-owned dealer groups in the United States. And they're very closed off. I don't think they do reporting to anybody. They just do their business. But every commercial is customer experience. And they dominate in the marketplace.
That's how it should be.
I use them. I mean, when I go get my car serviced from them, I get a video from the service tech. He walks around my car. He shows me underneath. He shows me everything. He gives me his name, his information. If there's any questions, I have his contact info, right? I mean, they focus on service, not price, and they dominate every single month. But it's taken a while. I mean, this is Carl Sewell wrote a book on it.
I was going to guess Sewell.
Yeah.
It's Sewell. I mean, Carl Sewell wrote a book on it. I mean, it's not an overnight model you build.
Absolutely not.
I mean, it's a top-down, and this is a long conversation, but you have to build the right management. You have to hire the right people, right? And I think, and I'm not going to say lazy dealers, and I understand what you're saying, and I don't want to call dealers lazy, but what I would say is I think sometimes we try to find competitive advantages or ways for profit or income outside of what I believe should be the standard, right? If we hire good people that know what they're doing, know how to sell with fairly transparency, and do all of that, then I think there might be less pressure on a dealer to try to find wiggle room in other areas for profit.
I would agree. I'll throw that stone, and I would not expect you to throw that stone either. We're going to, before we tear into that, before we really get in, and again, that was all a great overview on what this timely podcast is going to be about, for lack of a better definition and description, right? We're going to get into a couple icebreaker questions, if you don't mind.
Let's go.
Okay, before we get into all that regulators and risk conversation, which is going to take up a majority of this, which is important, let's talk about that online presence. What is one unpopular opinion about the car buying or F&I that would absolutely light up the comments section if you posted it on LinkedIn? Not what you have posted, but if you posted.
So your question is, if I ask consumers,
correct,
what they dislike the most about the car buying experience, whether I agree with the statement or not,
what would light up that LinkedIn post?
I would say, from what I hear from my friends and those that talk to, they hate the car buying experience because they hate the interaction at the dealership and the time it takes. That's what I get the most. I love to buy cars. Before I got in the auto industry, I told friends, if you need to buy a car, let's go.
Right.
I find it entertaining, and not from a debate or a battle. I just think it's fun.
Right.
But most people dread that experience, and Carvana speaks to why. If people like to buy cars, Carvana would never made it.
If they correct. And Carvana, ironically, not to date the podcast, I don't want to force this on our great producer Philip to get this out as timely as he can by any stretch, but Carvana just posted record quarter and record revenue, the likes of which should certainly wake up some of our dealer populace, to say the least.
I saw an interesting, and I'm going to anchorman the math because I can't remember the number. 100. What is the 6% of the time it works 100% of the time? But I was
60% of the time it works
100.
every time.
So I'm going to anchorman my math for a minute.
Yep.
But I saw somewhere that they're buying up. I want to say something like 13% of the used cars out there.
Yep.
Something. I mean, the volume of used cars they're getting compared to the rest of the market is crazy, simply from how easy it is. And one of the conversations I was on in one of the groups, somebody said that they sold the car to Carvana because they just wanted to see what the experience was. And the driver said the only reason why we don't buy more cars is we don't have more trucks to do all the pickups. We're short the manpower to handle the volume we could have.
It's daunting.
It's scary if you think about it.
It is.
That their biggest obstacle is the manpower to handle the volume.
And wait till we figure out that constraint.
Oh.
Wake up, dealer network. Come on, just buy all the cars. That's all you got to do. Make it fun and buy all the cars. So that would certainly be a comment section that would light up. Shannon Robertson loves to buy cars, and you would see that comment section ignite. Next question. What's one piece of dealer or F&I advice you keep seeing on social media that sounds smart but falls apart in the real store?
God, these are good.
These are icebreakers,
I'm
buddy.
about
We're
to
not
drop
even
enough-
tearing
about
into
to drop enough.
Drop.
You can.
These
We're
are good.
38.
These are
Philip,
good.
are we enough time in where we can start swearing?
These are good fucking questions.
Good. Good.
What's one thing that I see?
What's one thing that you see these quote unquote influencers, which again, we're not going to throw stones.
No, we're not.
I
think we get too much caught up into the game, right? I see influences, or I see people online where they turn it into a game, and I don't think car buying needs to be a game. I think it's a simple process in my mind where you have a product, you fairly explain the value of the product, you know how to sell, and you close it. I don't think we need to be in a game of, hey, I think I got potentially a lower rate, right? Hey, if you really want this, we can try these other things. There's a lot of dealers that just work off very simple menu presentations that know how to sell the value of a product. And I see, we're not going to call them out, but people talk about the game of going back and forth to the sales manager at least 3 or 4 times. And that's the standard process. And I just don't understand why we have to make it a game if that's the biggest complaint.
Makes it adversarial, makes it win or lose, makes it binary. And I think it absolutely falls apart. I 100% agree. Couldn't be a better answer. You want to talk about how good the questions are? That's a great answer. If you could permanently delete one phrase from automotive or dealer Facebook groups, what would it be? What's that one phrase that just...
It's the way we've always done it.
I can think too.
It's the way we've always done it. That's one of my...
That one's a classic,
God,
actually.
I'm tired of that statement. I hear it almost every day.
Yep.
And it's a constant obstacle that we have from a compliance standpoint, is it's the way I've always done it, or this is the way that I was trained.
I don't know how I protect the innocent in a response here.
No, that was a perfect answer.
It is absolutely the kiss of death. And again, talking to a guy operationally, not just compliance and support, when we start, try to tell a dealer his baby's ugly.
Okay.
I've got to tell him.
I've gotten in trouble for making that statement before.
Really?
Yeah. Even when the dealer wasn't doing bad things, somebody else called the dealer out, and I just made the statement, hey, I need to go help out because somebody said that when the dealer really wasn't. But people don't like that. I mean, if you think about it from a dealer standpoint, I get it, right? I got my name on the store. I do everything I can to do it the way that I feel like it needs to be done. Either that's what I was trained or that's what I know.
And that's how we always did it.
Yeah, and that's the way we always did it. And and if my name's on something, I'm very defensive if you call it my company, right? And now sometimes I got to stop and listen and process. Okay, what are you actually saying? But when your name's on the store or you run it, you are defensive of what you built.
100%.
Right, and you should be. I'm
And
not saying you shouldn't be.
Correct. And I am saying it is your baby. But
Yeah.
telling your baby it's ugly, telling you that there's a different and better way to do things is a very difficult conversation to have with a dealer.
It is. And it's not always, and I'm going to go back to the statement. We get in this world of right or wrong,
Right.
right? It's not always right or wrong. There's just a better way to do things where you're not illegal or illegal. There's just a better way to do it. It's a better customer experience. Your employees have increase in satisfaction of
Right.
their job. Sometimes there's just a better way to do something that has an overall positive result.
There is a North Star to all of it. And if we're looking for transparency, compliance, better internal and external customer experience, that's it, guys.
I think it can be that simple. I know that
It
we
really
love
should
that.
be.
And we're in an area of overcomplication. but
We wouldn't have a cool podcast talking about problems if there were no problems, right?
I agree.
Yeah, and I've said it. This will be like, I don't know how many podcasts I keep saying the same thing. It's not a complicated process.
It's not.
It can be very simple. It can be enjoyable. My personal recommendation is just find someone that you like and you feel is taking care of you. It starts there. And then after that, as I've said before, you didn't overpay. It doesn't matter what you're buying. Furniture, a new phone, some technology. Maybe back in the day you were stereophonic and you went to find, the coolest Blaupunkt ever, whatever. It was find that person that you can connect to and talk to. And we find this in our industry where we find people we enjoy working with. And there's a connection there and it's very productive once you recognize that connection. And there's other people in the business that, like, for example, I get solicited all the time because of the longevity of our business and a recognition of our name. And I thank them for the phone call, but I can figure out pretty quickly we're not going to have that connection. So it's probably not the best relationship for you or for me. And I'm now personally even referring to Shannon. I mean, from when we started doing this and the connectivity we personally had, plus what I saw him doing for our clients and taking him the direction that we like to take our clients, a compliance direction. And, ethics are not questioned. They can't be questioned. And our philosophy, that's to me what it is. And I think it's the same thing what you're talking about with a dealer.
Well, and you either buy a car or you buy an experience.
Right.
Right.
Hopefully it's both.
And I agree.
Yeah.
But a lot of dealers focus on the car buying process, not necessarily the experience process, right? And there's value-based companies, there's service-based. There's a lot of different models you can use for your business, and not one's. I mean, all of them can be successful, but a dealer has to choose what's the model that I want for my business, and they have to build it, right? And I have competitors in my industry. And we work hard to build a value-based compliance company, right? There are compliance companies that are very service-based, and they're good at what they do. But my focus was on the value side of it.
You got it.
I'm not checking a box. I mean, he'll tell you this.
Absolutely not. And
I'm not checking a box.
And I think to the dealership level, if we're talking literally bricks in brick and mortar dealership, we have gotten so far away from the customer experience that would suggest I've got a guy or I've got a gal. There used to be a time, and I don't want to age myself, but there used to be a time starting out in this business where people would come back to you for the experience, right? Were they brand loyal? Yeah, to some extent. Were they dealership loyal? Yeah, to some extent, but they were you loyal. I got a guy, I got a gal. That is so far gone in our industry. And I think, to Steve's point, I think it certainly applies to what we do on a day-to-day basis, which is how we arrived here at this podcast today, having that relationship with you as one of our partners in all of this as well. So if we could only get back to that, and only get back to that in our industry where I've got a guy, I've got a gal, and focus on the experience, we wouldn't see all of the negativity posted online about our industry, which...
Well, I've got a guy. I got a car guy. I
Yeah.
mean, I've used the same organization and the same guy for a long time.
I pride myself on being the guy for a lot of people. You talk about I love buying cars. Anybody that was looking for one, I still get excited on those text messages. Brian, I know I know you're not at the dealership anymore, but what do I do here? Hell yeah. Sign me up. I'm in for that ride. All together in for that
And
ride.
it's fun. And I always like to clarify. And I like the experience not because I'm trying to beat them up for lower price. It's just I just think it's a fun experience to go through, right? And I've helped friends buy cars, and I'm very clear with friends. I'll help you, but the dealers sell product that have value.
Yeah.
If I'm helping you, it's not to get the lowest price with no product.
Correct.
I'm going to help you to have the best experience you can. So next time you don't call me, you go, hey, I really like the experience. I bought a car. It did what it needed. I bought a couple products. It gave me the value that I needed.
Right.
Right. I mean, I buy products. One of the things that frustrates me in this industry, and you've seen this, you have as well. When somebody comes to your store to buy a car who's a finance manager at another store and absolutely will not buy product because they don't think they work.
It's insane.
It's shocking to me the number of times I hear that when finance managers from a different store buy a car somewhere else that don't buy product. Not because they can get it cheaper at their store, they just don't buy it.
Correct.
I don't know how you sell something that you don't believe has value.
It's insane.
It is. My wife's got a Ford Bronco. It's a flat windshield. We have windshield replacement.
Right.
Because when you have a flat windshield,
catcher's mitt.
it is. That it's going to break. Right? And this is going to air. I love my wife. She hits every curb. Right? So her tires have, I buy tire and wheel. Now, when I bought the Bronco, I didn't realize that the Sasquatch package put the rims higher than the curb. So she can hit all the curbs she wanted and not scratch the rims.
I have a vendor who's
curb
called me,
Yeah.
your wife is filing another claim, and I love my wife too. She's amazing. But, oh, my God, the tire and wheel piece. I'm like, you parking by Braille? What's going on
So
here?
if you go Bronco Sasquatch, the rims are so high, she can't even scratch
I
them.
have a Bronco as well with bigger ones.
You're in the Raptor, right?
I am. And so then I go over whatever I want to go over when I want to do that.
We're curb immune. Next question, good follow-up question. What's a customer complaint that goes viral online all the time that you actually believe is fair?
Though that I believe is fair.
Oh, yeah.
What a great one to add at the end.
Hook?
I think the one I hear a lot that as I research is I think this is a good one. I want to go one of two ways because I see a lot of social media comments. Not knowing they bought product, I hear way too often. And I don't know if it's fair every time, but that's one of the most common things I see is I just didn't realize that all this stuff came with the car. And I don't want to say that they didn't disclose it at all. Maybe could have been more clear in their disclosure, but I hear that more often than I think we should.
I couldn't agree more. I mean, that might literally be how I answered that exact question. There should never be I didn't know I had this, and I don't care. And specifically, we might be talking about finance products, but you shouldn't realize after you've driven your car home, parked it in the garage, that you have a front camera as well as a back camera. Like, just do a good job.
I agree.
Of delivering the car.
So everybody here has seen the movie Suckers, right?
Yes.
That's an old one. Oh my gosh, you got to.
I know. Oh no, I know of it. I haven't watched it. I know of it.
That's got a couple of funny scenes. They're not real. They don't really happen in the business, but the way that it was filmed and written speaks to this perfectly and involves a man in the shower crying with his finance contract in his hand. I mean, it's like that's never happened. But when you're on this side of the fence and you see it, you laugh, thinking, "Okay, it's funny, but it's not real."
Let me give you the opposite end. There's a finance manager down in Florida who has one of the strongest closes I've ever heard. And after every deal, he sends the customer a video. Mr. Customer, thank you for buying the car from me today. It's a great experience. I hope you had a good experience. I enjoyed meeting you. You bought this car from me today. This was your payments. This is what you've agreed to. You also bought these products. And you bought these products because here's the value they provide to you.
Wow.
If you have any questions on those products, if you need to use those products, or you have any confusion, here's my information.
And he sends this as a video.
Now, he had to get dealer approval. Let's be
for
clear.
sure.
There was a whole legal, hey, dealer had to approve it.
Yep.
And I said, why? And he goes, it's accountability. He says, it's accountability on me. I didn't want to ever be in a position where I pushed something to a customer that I didn't think they needed or they didn't think they would use.
Okay, so I got too many questions here. Domestic or import?
Oh God, let me think. Domestic or import.
Import. Okay. How long has he been there?
He's been in finance for, I would say, when I met him, he said he'd been through AFIP, probably been in the industry over 10 years.
Okay, and how long at this particular dealership?
Long time.
I couldn't see it other ways. That's what I was
same
asking.
store for a long time, but the store has changed ownerships a couple times.
Got it.
But he said at the end of what should happen after every one of our deal is we show a video from the president saying thanks for buying a car from our organization. And he said, I thought that was such a strong close, and I couldn't figure out why not every finance manager was showing the video. Because he says, if you have questions, I don't ever want you to be unhappy. Here's my admin. Like, he gives contact information.
How long is a video typically?
Just a minute and a half.
Okay.
But he says, I found that if my owner was going to put his name on it, why wouldn't I?
Right.
Right. But this guy's chargebacks are almost nothing.
I was going to ask you the retention. Like, what is the
crazy,
income retention per product?
Yeah,
I guarantee he doesn't.
Yeah, but he's not number one ranked finance manager.
Sure.
But he's always in the top quartile. He averages, his number of products he sold per customer is always in the top quartile. He makes good PVR. He has good retention.
Well, his net's got to be the better of everybody.
His chargebacks is almost nothing.
Yeah.
Right? Because he says, I follow up. Because he says so much happens in the F&I office, and then people get home and go, wait, they talk to their friends and family.
Absolutely.
Do I really need GAP? Did I really need VSC? Did I really need tire and wheel, key replacement?
Yeah.
So he says, I always like to do the video for just a reinforcement of those products.
And there's a lot of great people out there like that, because it's one of the litmus tests for me personally is whether I believe you care about the name on the front of the building. And that's a big deal to me, because I don't have a lot of respect for anybody that is going to talk bad about their employer, going to talk bad about their wife, but not respect who they represent. I represent a family name that business started well before I got in the industry, and I still believe, like, as if it's my name, I have to do that. And you're talking about a guy that does that. And those are the best. It doesn't matter what business we're talking about, but in the car business, maybe more so because of that differentiation you talked about in the most trusted and the how did you put that earlier? We were talking about we're the least trusted, but we're the most regulated or something.
Yeah, so we're one of the highest complaint industries and one of the lowest trusted industries from a national standpoint. When I bought the Bronco, the F&I one of my statements I hate in the office is I'm working for you. And I don't like that statement, because you're not working for me. You're working a balance of what's best for me, what's best for the dealer.
How would you restate that?
And what's best for your bonus. Mr. Customer, you're buying a product today, it's expensive, right? You want to make sure you protect that vehicle. My job today is to offer you products that help you protect that investment for the long term, that reduce the amount of money coming out of your pocket for maybe repairs in the future. Right? I don't even need to make a statement. But he kept saying, I'm working for you. I'm going to get you the best price. No, if it was, in my comment was, if it's the best price, then you're giving me everything it cost. Right? This is why with rate, we never use the word best with rate.
Right.
Right? Because it's the best rate. No, because if you've marked it up, it's not the best rate.
There's a great clip, Philip, exactly his introduction of what he does for a customer. That should be copied.
Yeah.
If you haven't copyrighted it already. I know you haven't, but
yeah.
Still, you're delivering that from an altruistic, ethical perspective, and that's real.
If you wish to do business with us, this is the rate available. It's just a simple statement.
I love that. What is a compliance opinion that would absolutely blow up your DMs, right, if you posted it without context? I don't care if it's Facebook, Instagram,
we always make
LinkedIn.
Comments that we should have like T-shirts or handouts for compliance statements that we make that nobody would ever understand. When in doubt, fill it out. Right? Only car people understand what that means from an 8300 standpoint. But it would be funny to have that on a shirt or a mug or something.
I'd buy that shirt.
Yeah, we just joke. There's all these statements we can make that nobody would get. I'm buying time while I think about your question. I think that, and this is changing, but I mean, I've been with AFIP for 12 plus. I've been running it for almost 7 or 8 years, and I think the the biggest battle we keep having is that compliance is an obstacle to the process, right?
Yeah, it's not.
It's not. And in today's world, compliance is everyday life, right? And I think that's the battle we keep fighting with some dealers is we're not trying to make your let me change the statement. Compliance is not designed to limit your profits. And so maybe that's my statement. Compliance is designed to help you protect profits, not limit your profits.
Well, I think it guarantees, to answer the question directly, it's going to blow up your DMs. And I think, unfortunately, that what dealers don't understand, and what you're really saying, is that compliance is table stakes. Like, it doesn't even make sense that we're discussing that or analyzing whether or not it's an income builder or an income restrictor. We're talking about literally transparency with a guest, specific to finance. There is nothing else. It is table stakes.
So let's put it into action. NADA has a policy called the NADA Voluntary Protection Product Policy. So after all the disparate pricing allegations and with lawsuits and everything happening, NADA has come out and said we no longer call our products aftermarket products. We call them voluntary protection products, and it's a good rebrand for consumers.
Sure.
If you implement the policy, a dealership through legal review make sure the products they sell have value, and we can spend all day long on what value means.
Right.
2, they put a cap ceiling price on those products. And so when we go to dealers and we talk about the VPP policy, there's a lot of hesitation on implementing a policy that caps product pricing. And in my opinion, this is one of those compliance areas that we see some, I would say, hesitation to implement. But at the end of the day, if you implement it and you do it right with training, it actually helps protect you because, 1, it eliminates possible disparate pricing allegations, but 2, it forces your F&I managers to sell multiple products to meet back-end allowance. And I keep telling dealers, capping your products does not mean you can't max out back-end allowance. It just means that you have to sell multiple products to do so. So if I have a back-end allowance of $7,000 from the bank, and I jack up my VSC price from $3,500 to $7,000, that's a high percentage chargeback, and my value to the customer is minimal versus meeting my $7,000 by selling a VSC, gap, and tire and wheel. So my value closes stronger, my chargebacks go down because I've increased my value, and those are products the customer's probably going to use. Hopefully they don't have to use gap because they don't get an accident.
Right,
but
right.
Those are products the customer will probably see value in over the life and probably buy them again.
And by the way, they told me in my interview process that they needed this type of protection based on the questions I asked. So you're providing a much better, fully protected loan. Yes.
But the one thing that the policy doesn't require that I ask dealers to do is to look at the F&I bonus pay plan and make sure they're bonused appropriately for a number of products sold per customer. And I think
compensation
not
should
enough
lead to behavior.
There you go. Yeah. Not enough dealers have average number of products sold per customer as a bonus metric. Right. I think that should be the larger metric, not how much did you increase the product over the floor cost, right? And I know that's one of those, to your question, that's one that would drive a lot of comments in the DM. But we're all bonus. It doesn't matter what industry you are. It doesn't matter where you are in life. We're all bonus driven. I mean, my comment to a lot of people is if you want to be successful, find out who you report to, how they're bonused, and how you help them meet that bonus. Right. Because if you help them make more money, they're going to in return reward you for that.
Couldn't be better said.
I could add one questions to Shannon, but I want to.
Please.
My DM blow up is talking about, and you touched on it, is the customer benefit of what rate markup benefits the customer. And I've had this argument with some older finance people who just can't change with the times and the path of least resistance, and they thought it was, just completely ethical, and I don't. I think I wished, and I've talked about it for probably about 10 years, that all the lien holders would just go flats. They need to go equitable flats for the business the dealer brings them, and in return, the dealership should be compensated for it, and it's part of the process of helping the consumer. But anybody that thinks that taking 2 points is best for the customer over providing real value products, you're crazy.
Crazy.
And now that I don't do DMs.
That's a good DM blow up. And somebody told me the other day they've been in the industry 30 years and they've been talking about going for flats for 30 years. Right. When all the disparate pricing allegations and lawsuits enforcement kept happening,
that was the answer right there.
The comment that came out was, from a government standpoint, markup over buy rate is not a source of profit. And everybody in the auto industry went, what?
Yeah.
So, and I'm not going to say flats, and I think you have a valid statement that eliminates a lot of what's, a lot of what dealers might be doing that we might think is
the wrong ones.
Well,
the people doing the wrong thing.
People that are aggressively marking up beyond what we should. But I think a standard markup over the buy rate, if you understand the definition of markup over buy rate, is to reimburse the cost of the dealer for what they incur for originating the transaction. So if you look at that definition, a small average markup over the buy rate does defend that definition. Right now, whether that's a half a point,
right.
Point and a half, we can get
Look,
into that.
I go back 40 years where there wasn't caps.
Oh, yeah.
And 4 points was, I didn't personally do it because I didn't believe in it, but I know people that did. And I wasn't afraid or upset, and I wish I could remember what year it was that the lien holders didn't have an association, but they kind of bound together, and then they started setting. The 2 was pretty common. I think the longer term ones, 2.5, but it finally became a policy, maybe in the 90s, maybe in the late 90s, they started saying, okay, wait a minute, should be the threshold. And that was fair because, again, everybody was treated the same.
Yeah.
The disparaging.
Or fairly.
Yeah, fairly. The disparaging piece, the way the government did it, and this is where I get into regulations get stupid because they don't know. They really don't understand to be able to make a decision to say, oh, just because someone's last name sounded a specific ethnicity that they're a protected class, and they weren't. But they literally used that as a litmus test. Was, well, what's the last name? Or where's their zip code?
Well, it was the geocode. You're right. It was the geocode, unless it's a 100-year-old formula. The formula is bullshit.
Total.
Let's be clear.
Complete bullshit.
But it was, what, $800 million that SunTrust Bank, Ally, Wells Fargo. That's what changed a lot of the
standards. They didn't actually create. They didn't.
No.
It was the dealer.
No, but so the CFPB went after the banks.
The banks
pointed the fingers at the dealer, and then the CFPB tried to use the holder rule, which is in the contract, to go from the banks to the dealer, but the holder rule only goes dealer to bank. So when they got shot down on trying to use the holder rule, the CFPB went just to the lien holders because that's who they had authority over. And I think at that point the CFPB and the FTC did not work together.
Right, and that was one of the things
which we're thankful for back then.
Right. You didn't want to give CFPB FTC powers.
No.
Yeah.
But once Chopra went from the FTC to the CFPB, right? He was the head of the FTC, went to the CFPB. That's where they started to, I think, share more information together. But that was, if I remember correctly, that was before they worked together. But that's what caused the banks to even get more aggressive on the markup over buy rate in terms of putting caps on it. California has it as a state law. There is a California markup. If I remember correctly, anything up to 60 months is 2.5. Anything over 60 months is 2 points.
1.5 or 2 points.
Yeah, whatever it is.
And it does decrease as you go longer term, which is the only.
I had it backwards.
You had it a little bit backwards, but it's. That could be an entire podcast. We could literally spend the next 3 hours debating that part of it, and it's all relative, and we're going to touch on it as we go through here.
But we just picked on 2 massive DM blowups.
It's insane. Let me ask you this as a follow-up question: have you ever typed something and deleted it? Just based on that algorithm, based on that calculus, like I don't want this to go.
I always type something and delete it.
Yeah, okay.
That's
the only statement I need.
No, let me be clear. Okay. I always will type something out, and I don't put a name in the email address, and then I go back and look at it, and then I go back and rewrite it.
Good 24-hour rule.
I don't go 24 hours, but I try very hard to make sure that the business I run has the best name in the industry, and
Yeah.
we provide the best value for the money. That's always my statement. I'm not always going to be the cheapest. I'm not going to be the most expensive, but I'm going to give you the best value above anybody else. And we have those in our industry that get into trash talking, and I don't understand it.
That's kind of how this podcast started, is because we got tired of watching people do that and said, "No, come on, we can get away."
I
from
don't
that.
understand. I don't understand the trash talking. I love competition. If you create a better product than me, then fuck it, let's go.
Yeah.
I love competition.
Well, and the nature of automotive, I mean, that's what we thrive on is that part of it. And that's part of when we'll get into some of the rules. I think we're going to shift. Hopefully, I think these rules and this legislation that is new, and we're going to discuss it here in a little bit, is going to allow dealers to really let the cream rise to the top. This is going to become the most competitive landscape on all of the why buy here's versus just that pricing, and a drive to the bottom.
Let me ask a question.
Yeah.
Do you think we're in a competitive industry or a copying industry?
Well,
I think we're more copying because, and that goes back to he didn't want to use the word laziness.
That's exactly where I was going to go.
But we are, and I don't know. I always try to think what's the perspective outside of our industry, but in ours, we are professional plagiarists. And there are some really amazing ideas and things that we glom or glean from other people, and that's okay. I mean, if you make it your own. There's been things I've done out there that people have stolen from me, and I'm like, I don't care. Use it. If you feel like it fits you, use it. But trust me, it's never been anything mind-blowing or going to change the world for any chance. No way.
Well, it could. You got some good ideas, Steve. What do you think? Shannon, you asked the question. Because that was going to be my answer.
It's a combination of both. I mean, I think we are a competitive industry, but I think we are also a very copying industry. I think a lot of the times we look and steal ideas as opposed to finding a unique way to make it our competitive advantage. And I see that a lot from the compliance standpoint. There's a lot of copying. There's not a lot of competitiveness, in my opinion. And I think, from an industry standpoint, we're going to get into the new rules. And I think it's going to be interesting to see how the industry adopts those new rules. Do they adopt it from a competitive standpoint, or do they adopt it from a copying standpoint?
Right.
Yeah, and when I say a professional plagiarist, I'm not a copying guy, but what I have had some success with and enjoy is finding lightning in a bottle.
Oh, absolutely.
And that's from that spark of an idea that somebody did. Okay. It's really cool. It's interesting. You brought something up earlier. That video of that gets sent out is really got my brain spinning. But then, how do I not be completely copying? How do I adapt it, adjust it, modify it, and then say, okay, this is a process, a product, a system that we do. And Brian's just completed one of the most mind-blowing one, which we won't get to today, but the Sales Team 6 manual, which is how many pages, by the way?
Don't ever write a book and don't ever do a podcast. I'm telling everybody, all my viewers, all of our viewers, please don't do
We're
this.
here because this was his idea.
150 pages.
If you take my idea and make it better, I take that as a challenge.
But let's
and a compliment.
I love it.
And it's a compliment.
It is a compliment. Okay, you saw what I did, and you found a competitive edge. To me, that's a challenge.
But here's what I want to pull this thread because I think what you're tugging on is super important here. And yeah, I agree that imitation is the greatest form of flattery, right?
One of the statements I hate the most.
I hate it, but it's true, right? To some extent.
He said it, not you.
I would suggest, and I want to redirect this question to you, that unfortunately, but historically, automotive has been a reactive industry versus a proactive industry. Hence, why we allow legislation, why we allow regulation, why we allow some of these things to dictate. What I mean by that at brick and mortar is simply that if a dealer is on top of it and he saw this letter go out, and we're going to get into the letter, we're going to get into all that. I promise we only got one more icebreaker and then a couple of personal background questions I want to direct. But if a dealer sees that letter come out, he is not, first of all, he hasn't adopted that principle before it takes effect. If he did, we wouldn't need it. If we did as an industry, we wouldn't need it. But he's waiting to see what maybe some of his competitors do. And unfortunately, that puts us in a reactive versus the proactive category, especially how it applies to this.
Well, and to Steve's point, there's a lot of people that do well in this industry just selling cars,
Right.
right? And then not everybody has the ability to see where the market's going to be, right? And there are some people in this industry that have
Lack
been
of foresight.
very genius at going, I know where the market's going to be in 5 or 10 years,
Yep.
and building the model to be there that other people start to copy.
100%.
And that's a rare trait. And regardless of what industry, that's a very rare trait.
Visionaries are as rare as it gets. We could name 5, and there'd probably be only 5 you'd remember.
There you go.
And they'd be the Bill Gates of the world. You know,
It's a rare trait.
It is.
Right? So in any industry you're in, they tend to be the one that everybody copies once they see their model
Absolutely.
is where they need to be.
absolutely.
But-
and where they need to be doesn't always apply to customer satisfaction or some of those.
That's where I'm going. I mean, I didn't grow up I grew up in the auto industry. My dad owned companies in the auto industry, but my career path was not to take over the business my dad started. I have
Right.
a whole different career path.
Oh, I know. We're going to get into it.
And through that career path, that was a very customer response based model,
Right.
right? It was there were 4 finance companies battling out to be the best discount broker possible with apps and everything. And it was 100% driven on consumer responses, roundtables, right? Feedback from your customer. I mean, we made changes after changes because of what our customers told us. I don't think the industry as a whole has hit that part yet. Right? We
I
wait for
couldn't agree more.
we wait for legislation change, we wait for state law changes, or we wait for somebody else to do something and then we follow what they did or copy what they did. But as an industry as a whole, I don't think we give as much weight to the consumer responses, and I don't feel like we seek consumer feedback as heavily as other industries have done.
I couldn't agree more.
And I'm not, like I said, this is not a right or wrong conversation.
No, and
it's just something as an industry I think we need to be better at, right? We make a statement in AFIP that if you treat your customers fairly and ethically, there's less pressure on the government to enact legislation,
Exactly.
right? We have that on several slides in our presentation because what we're trying to tell the dealers, if you don't want the government in your business, listen to what your customers are saying, treat them fairly and ethically, and respond to their complaints.
You were with Fidelity,
Long time.
and you manage as a managing partner, correct? Am I getting the title right?
So I managed over medium-sized 401ks or small-sized 401k companies that had 401ks. I was their account manager, oversaw. I didn't handle their investments, but I did the presentations, helped with employee engagement, made sure they had the right services available. My territory was La Jolla, California, and San Francisco in the wine country. It was the best territory anybody could ever have.
What perspective, and we're going to segue into your elevator pitch, so you can lead all this into AFIP, but what perspective did that allow you?
I liked Fidelity is a great company to work for. It's the largest privately owned 503c, if I remember, ever. I mean, it's still privately owned today by the Johnson family, if I remember correctly. It's a great company to work for. The amount of training they give managers is incredible. And I started there. I was going to college. I worked for Ameritrade while I was going to college, and I was working night. I didn't know what I wanted to do. I still don't know what I want to do when I grow up. But I was working on the customer service team at night, and the market crashed, and my manager says, "You won't get fired." And then I got fired, and he says they fired every night team. There's none of us left, right? It's just that's how bad the market crashed. So I interviewed, and I got a job at Fidelity. Started out as customer services on the phone, worked up to manager, and anyways. I really appreciated the amount of time and energy they put into managerial training, right? I mean, we were constantly going through training on behavioral training, right? How to build a team using, the Myers-Briggs scores. And I had very good mentors that really, really emphasized the importance of identifying behaviors and traits and building a good team based on that. How to identify talent. I mean, there was a lot of things that I learned through them, but I just couldn't do another mutual fund presentation. That wasn't where my heart was. But I had a moment at Fidelity where my director came to me and said, "Hey, we changed some decision makers at the top. We had a new director, and he said, "Hey, we have an audit coming in. Can you help us with the audit?" And I was like, "Well, why?" He's like, "Well, technically, we need to have somebody here kind of in charge of compliance." And I was like, "What does that look like?" And he was like, "I don't know." And I was like, "Well, I don't know." But he was like, "Don't fail the audit." So I did a lot of research and learned what it meant, because we were licensed. We had some SEC licenses of 770, just 77. So we had to go through a routine audit. So then I got tasked as a kind of a job to just make sure our folders were in compliant. And that's how I got involved in compliance, is I would have to do those audits. And it was a nightmare because it wasn't a full-time job. I had my normal job, but I had to make sure. And it was a nightmare tracking down other managers and signatures, and you didn't document. So that's where I got into compliance and the importance of consistency and learning how to put compliance in place. The secret that I learned is that I made every manager do an audit with me. And then if they ever had a moment where they missed something that caused my audit to not be perfect, then I made them do another audit with me. And nobody wanted to do a 4-hour audit with you. So you know,
there's the teeth.
You do that a couple times and everybody does their stuff, right? And my compliance files were always good. They were always intact. We never had an issue. But that's where I got into compliance and the understanding of the compliance policies, procedures, the system, the training. That's where that came into play.
Gotcha. That's pretty amazing. And I think it's amazing for a couple things. First of all, a lot of people that end up in automotive industry have a real narrow bandwidth, meaning they don't have exposure to other industries.
They don't.
And I think that's obviously a blessing to add, you know, and to see things through that lens. For people that don't know, Shannon, that may have been where it originated. Give me kind of your elevator. Tell people what and how and who you are and how you came into this industry. Both, obviously, we talked about Fidelity, but
I mean, so my dad graduated from college, and all of his friends went to Denver to go get big jobs. And my dad went down the street to a dealership and said, "I want to be in the auto industry. I probably won't be here very long, but I want to learn everything about running a dealership." And my dad's been in the auto industry since then. He started a service contract company in the late 80s called Dealer Based Services that eventually got bought out by Warrantech, then Amenta. You know, there's a process. Mm-hmm. So I grew up in the industry, right? I love cars. I give my dad credit. He always took me places with him. Trips for us would be come with me to a business meeting, and then we'll stay for a day and go to an air show or we'll go to a museum. So he took me with him at an early age, and he would always talk. And he was always talking business because he was self-employed. So your family hears you every day talking business. And I love the cars, and I just grew up in that industry. You know, growing up in this industry, watching him, I always enjoyed the auto side. Obviously, I was out of the country for a couple of years. I came back, got married, and I started in the investment side. And I really enjoyed the investment side, but it just wasn't where I found enjoyment from an industry standpoint. Great company, loved everybody I worked for, just wasn't where my heart was. And so I decided to go into the auto industry, and I worked for a leasing company in the DFW area. I just went and got a job. It's a one-stop. You're a sales finance. You do everything together. And I did that for a while, and then my dad came to me and said, "I'd like you to come over to AFIP," and we had a lot of conversation about it. And I kind of joked, "Well, you're self-employed. There's no more vacation," you know. So we went back and forth over it. But with my compliance background, now with being actually working sales and F&I, it was a good fit. And my dad will tell you the goal was never for me to come in and take over AFIP. That was not why he ran AFIP, was for me to take it over. It just, my career led me to that.
But it did round it out.
It did.
Yeah. And again, that I want you to be able to impart that part on this podcast too, is to say, okay, I had this experience. I don't have this narrow automotive. However, I do have a passion for automotive, which is where my heart led me, which is why we're there, right? I did it at the brick and mortar. I did it at the dealership level. Dad tapped me on the shoulder. I said, okay, where does that go? Where did you find that passion to meld all that together?
So, a couple of things. One, I think I read a book a long time ago, and I've used this quote way too much. The problem with building a legacy is you never see the fruits of your labor. right? That's the problem. And you work for a family-owned business, and I'm sure that, and I know the gentleman who started it 70 years ago probably didn't see the level of the benefit that it's providing now, right? You can correct me if I'm wrong.
Yeah, no, Tom started since '68 and was an innovator. We were the oldest, but he passed just a few years ago. He got to see the next generation, and then, and I'll never forget this. Sitting down with him when I first met him, he said, I think you two are going to do really well together. And he was talking about myself and his son Mike, who's our boss and partner, and but that's very rare.
Yeah,
because you don't expect to see that.
You don't. So part of my passion, one, is I want my father to see the fruits of what he started, right?
I love that.
The guy that I run AFIP with, Tevis Grisso's a good friend of mine. I've known him since junior high. He lived with us for a while. My dad is the second father to him. He shares that same passion. So the two people that run the business, and if I get emotional, I apologize, but the two people that run the business are passionate about, one, making sure Dave sees the fruits of his labor. Two, my dad doesn't half-ass anything in life, whether it be parenting, running a company. I mean, he's the only person that I've had to go get a right angle out of the garage and a tape measure to make sure the TV is perfectly aligned in the entertainment center.
As it should be.
And I'm not joking.
And I've seen him speak multiple times.
Yeah. I mean, so
and
my dad.
If you've ever seen him speak, and I'm sure he's on YouTube somewhere, there's somebody, you'll totally get the picture that Shannon's talking about.
He doesn't half-ass anything. And when we were asked to come in and take over, we carry that model as well. We don't half-ass anything we do. And then my dad was about value. He had a lot of opportunities to to do things that would have produced a lot of income for maybe little value. And he did not take those.
That's an important distinction.
It is.
Yep.
So a lot of our focus on what we build is on the value of what we're providing, not just are we checking a box. And there's a lot of compliance companies out there, and I tell dealers all the time, if you're happy with who you are, stay where you're at because you're doing more than most dealers, right? Dealers need to be compliant, and if they have a good provider they like, I'm good with that. I just give me an opportunity to pitch my product when you rebid.
Right.
But if you're doing what you're supposed to, I'm very supportive of that. But where we want is we want dealers that really want to do the compliant thing. And that's our focus. It's not providing a service that checks a box. There's options out there if you want to check a box. And if that's what you want, go with those options. I don't have a problem with that, right? There's a lot of companies in this industry. All the compliance companies can all be successful with as many dealers as we have. But if you're looking for value and you're looking for an actual solution, as we tell dealers, we're compliance to resolution. I don't want to come in every quarter, do an audit and find the same problems.
Right.
We want to work towards. So the value we provide is what one of our focuses. And a lot of the value it all comes down to what Dave started. I mean, he started at AFIP in 1989. He was one of the founding members. I mean, nobody knew it wasn't even a compliance company back then. It was just a certification company.
Couldn't spell compliance then.
There you go. Nobody knew what it was because we were trying to protect dealers, right? Because the largest area of risk they had from a consumer complaint or enforcement action or a lawsuit had to do with sales and F&I, and nobody taught them what they could or could not do. So, he was very innovative in where he saw the market going, right? But that's value is our focus, and value is where we stay today. But that drives a lot of that, and I'm going to give Fidelity credit. I mean, the training that they gave us, the focus on the customer experience, listen to your employees, how to manage, right? How to listen, how to acknowledge, how to give feedback, right? All of that stuff ties into what we build today.
I love that. Let's unpack that. I'm not going to try to make you cry, but I want to talk about something that you said.
I think I'm past the emotional moment.
Let's talk about what would and how you show Dave that value. How do you honor his legacy going forward? You, Tevis, correct?
Yeah.
You and Tevis both, but mostly you. Talk to me about how you show him while he's watching.
No, that's good. I mean, Dave's 84. should be retired. Dave's never going to retire in life. So I mean, a lot of the way we show him the values and the quality of what we produce in our training and in the products that we have, right? I think the quality and the value and the level of how we train is different than anybody else. And Steve can speak to this. I mean, we go to levels that really nobody else goes to, and we hold our dealers accountable, right? This is what we've trained on. This is what you're supposed to be doing. If we do an audit, why aren't you doing these things, right? This is what we're training you to do. We're here to protect you. And I think the way in which we do it shows the respect for what he created.
Does Dad see it?
I think he does. I mean, Dave's, like I said, 84.
Do your kids see it?
My kids are so far out. You and I are saying I got kids out of the house.
Yeah.
I think the kids see work ethic, right? And I think that's the main thing that I want them to see is work ethic.
Right.
Right. I mean, my dad was raised in a house where, the joke was if you didn't feel good, Grandma said, go do your chores at the farm and then tell me whether you feel better or not.
Right.
Right. So I grew up in a house where you worked before anything else, and work ethic's the most important thing. As I told my stepson, people might not know you by name, but they should know you by how hard you work.
100%.
And that's something that my dad instilled on me. And that's something that I try to instill on my kids, my stepkids. I've got nephews that I've helped raise. I've got 2 grandkids. Everything we focus on is the work ethic. And whether they know you or not, people should know you by the value of work you provide in your finished product. And we can make it cheesy. I mean, I'm an Eagle Scout. I grew up in Scouts, right?
Yeah.
The joke was you always left the campsite cleaner than you found it.
Right.
Right. I feel like that's the same thing in what we do with work. It's the way we were raised. There was no other option. This is how you do things.
Well, I've talked about it before. Legacy's the most, well, again, it probably has a lot to do with age.
We'll have a drink.
It's a good place to have
Cheers,
a little
gentlemen.
cheers.
Yeah, it is.
Big
Sorry
reach.
about that.
I grew up in the industry. My dad was a used car manager, opened up 2 used car lots. My grandfather before him owned the auto auctions in North Dakota and South Dakota. When I see you passionately describe how important it is to you for legacy, for that, we'll call it a North Star. I know I probably overuse that word on this podcast, but it really does hit home with me, because at some point, who we touch and what they remember for us touching their lives becomes the most important part. Nobody gives a shit how much money I've made. Nobody cares about what your W-2 or W-4 look like, or whatever it is, and that shows you how much I know about income. I actually don't know which one it is. The only thing we have in automotive, and I think automotive is fairly unique to this aspect, is our legacy. I want that phone call from that sales guy that I may have managed back in 1998. I want that text. Hey, good to see you still in the business. You meant a lot to me. All those things.
So what created that in you?
I don't know. I don't know if it wasn't something I realized recently. To be honest, Shannon,
Yeah.
I really don't know personally what made that an important part of my career. Because to be honest, I don't know that it was there before. Now, what you said hits home with me. My grandfather was the scout master, and one of my greatest regrets was diving too in depth in my summers into hockey and going to hockey camps versus getting my Eagle Scout, which my cousin, who's an attorney in Minnesota, kind of back home, but not really back home. Being from North Dakota, we don't accept Minnesota's back home. What am I saying? But he went through and he's an Eagle Scout, and he still, posts that on his resumes. It's on his LinkedIn. I don't think he's offering a resume to anybody lately.
It's one of those things there are people that I'll bond with in my 50s over the fact that we got our Eagle Scouts 35 years ago. It's shocking, not a little thing, but it's shocking how much people bond over that.
Right.
Over attaining that level.
This is going to be an extremely regional story, but I used to go into Strauss which was a clothier in Fargo, North Dakota. That's where I'd get my suits from. And because it was the family clothier, it was everybody's clothier in Fargo, I think, for suits and stuff like that. But the owners of that particular store had a picture of my grandfather in there as their scoutmaster. That is in part of his legacy.
That's funny.
Which, you know, when you say those stories and you touch on that and you express that, what you're leaving behind and allowing your father the opportunity to witness it and enjoy it in this time, I couldn't be happier for you to be able to do. My father, whether he knows it or not, whether he watches his podcast or not, made the statement, Brian, that you'll be a terrible car salesman. I went to school to become an English teacher after the Army, and I got recruited away by one of his friends because I couldn't suffer the $18,000 per year in North Dakota that I would have made as an English teacher.
Oh, my God.
Okay? So he recruited me, and I said, yeah, and I told my dad, and he goes, you're going to make a terrible car salesman. Now, whether he said that protect me or not.
Were you a good car salesman?
I was a phenomenal car salesman. Whether he knows it or not, I hope he realizes how much of his legacy I'm carrying with me today. And my grandpa didn't get to see it. My grandfather passed away in 97. I actually didn't start in the car business till after he passed in 97. But I do take pride in all that line, all that legacy, all that. Thank you for sharing that story.
Let me jump to you, Steve. What you and I have similar values. We have a lot of conversation on value driven on how we do things. We do business together well for a reason. What instills that? Where does that come from you? That value driven, because there's a lot of ways to run businesses here. You are running a family. What is essentially a family business as well.
True. Yeah.
What creates that value? You've had a lot of opportunities to sell for a lot of money. You probably could have done a lot of things to dramatically increase profits, but you stick I know the balance of how you make decisions, and it's not just profit driven.
No, not at all. You mentioned something. And I've thought about this before. I just want to leave. When I'm gone, I just want it to be a better place than when I got here. I wasn't a bad place when I got here. I just want to make that impact. There wasn't the same lineage that you guys had, where my dad was in the car business, he was not. I had a bigger impact from a grandfather that worked for us old people, F.W. Woolworth, for 49 years. We've had a podcast, and Brian's talked about our industry being unique, that you can start, cleaning cars and eventually own a dealership. My grandfather swept the floors and then retired in New York City and Wall Street and in the Woolworth building, and, was a big executive, and I respected that. And it's what drove my loyalty to the people that I've worked for in the past. I've never worked for a ton of different dealerships. I worked for two. I've worked for, two families, if you will, for the majority of my working career, other than being a kid and, working at a Kentucky Fried Chicken or even a bank that I worked for. But that's probably what started it. And then I think now it's more important for me for leading my children to do something better, to provide for more than just yourself, where it starts with typically your family, your immediate family, your spouse and your kids, and then the family that I work with. And the short time that Brian and I have worked together, I would hope that he would have seen this. And I can say that people that have worked with us longer recognize I'm in this for them. So if I take care of them, if I make sure that their opportunity is there because we've built something that's strong, that's well represented, that will instill in them the same passion to do more, to be successful for their families. And it's that kind of pay it forward mentality, if you will. But it was, and what got me there, there wasn't a single individual. I mentioned my grandfather, but there were some people I worked with in the business who just did things right. And I paid attention to that. And on the flip side of it, and I just had this conversation with somebody recently, working in a dealership, being serviced by people that I hate to say do what we do, because they didn't. They were big box companies, and they had their process of this guy's not good enough. Let me get you another one. Instead of developing that person and making them more personally successful, it was a throwaway mentality. I learned more what not to do this job when I worked in a dealership, because I didn't have, there was one individual who did work for a big box company, and I'm not going to name or the company. And of course, he left eventually and went on to do some great things, and I'm sure had a successful career, because he was the one person that goes back to a simple adage is I care about your income. If I care about your income, then my outcome will be just fine. And that's our mentality, has been. And I think thankfully I was supported. Mike and his dad supported that mentality. Not that they ever had a different vision, but they recognized mine and what I tried to do for our partners and clients and their people. And I think I can tell somebody, if you're looking for a recipe for success, that's where it's at, because my phone rings like yours does, because they know when they call me, it's not like, hey, I've got something great to sell you. They want my opinion. They want to know what my thoughts on what they're thinking about doing. And then they might say, well, what can you do that's similar to that to help me? They're asking me for that opportunity. And nobody's asked me that question. And I think I have no problem talking, but that really gets my brain thinking about the legacy I want to leave, not what I came from.
Well, and Tevis and I joke, because Tevis and I have known each other, like I said, since junior high. I mean, we actually lived together for a couple of years. And we joke about when we first started to kind of like, because Tevis worked at a car dealership, went to IBM, so he had car industry experience. He is my polar opposite in life. I am ADD. I've inherited great talents from my dad on being a visionary on things. I feel like I know where the market's going. Tevis is the guy that runs a tight ship, make sure he gets mad at me because I commit to deadlines, because he knows he's now the one that has to make sure the team meets those deadlines. Right. So we're constantly on conference calls with him going, please stop committing to time frames. But him and I joked that when we first started 10 years ago, it was about Porsche 911 Targa 4S's on our garages. Like we're successful in life when we've hit these marks. And now our conversations have nothing to do with that, right? Now we're talking about, and we're not trying to sell, but now we're talking about if, we feel like we were successful if we retired Dave and Linda, my father, because it's work, I refer to them as first names, but we were able to hit checklists that have nothing to do with the Porsches and those other items. Right. Not that we wouldn't want a Porsche, but we joke about the fact that when, between 10 years and now, our conversations and our focuses are completely different. What our priorities are, what we define as success has dramatically changed over the last 10 to 12 years as we've kind of grown into what we're building and what we want out of it.
Isn't it funny, the irony, and I'm going to get them wrong, baby boomers, Gen Zs, Gen Ys, whatever, and what is it, wisdom, or what is it, youth is wasted on the young, or something like that. We are energetic enough and driven by what we do for the success of others, but you see it a little more clearly at this age of life and experience, that you can't teach it. And there's generations that get frustrated by it. Well, I'm smart, and I know this, and I know that. I get it. But the experience of doing it is what will hopefully lead you in the right path. That's it. I don't know. Well, not very philosophical, but
the lessons we learn and the lessons we pass down. I find most of the time I'm having a lesson conversation, it's not about something I succeeded in.
No,
it's about something I you know what, I was completely wrong, but here's what we've done to correct this, or here's the lesson I've learned. I mean, or better here. I don't mean to even stop.
No, go, Shannon, but even better than that, it's how you reacted in that moment and what they saw and how you responded in that moment. That's what I think that's what I think we forget. First of all, don't ever, especially in front of me, and I've cracked you a couple times, don't ever question whether or not you're leaving that legacy. You're not trying, first and foremost.
Thank you.
And you're 100%, and I love you for it. But I think what we forget is the lessons that other people see, and you touched on this, Shannon, because I'm stealing your thought in this, that I hope they see my work ethic above and beyond anything else I've done. It's not I have a house, I have a Rolex, I have a this, I have a that. I've had all those things. The money means F all, right? You need money to survive. It just means nothing in the grand scheme of things when you get to a certain point of reflectiveness, wisdom, and some of those other kind of things.
And there's nothing wrong with owning those things.
No.
There's some very successful people that have a lot of nice cars and nice. I mean, we all have nice things, but nice things come with success. But I'm not driven by those nice things.
So I'm going to throw in a humble brag.
Well, that's what I was just going to say. But that's what I was sharing with with my stepson the other day. We were talking about cars, and I said, cars for me are not a sign of. So cars for me is not the sign of success. It's just a benefit of being successful.
Love that. Yep.
And I think it's, and the point I was trying to make to him is my measurement of success is not what I have in the garage. That's just the benefit of what I measure success provides if I hit my goals.
So I'm going to give parenting advice to anybody that wants to listen to this. The greatest lesson I've ever seen, and I can take a little bit of credit for it. I have a successful, almost 30-year marriage, couple of great kids that my wife raised well. I give her all the credit. But a few years ago, I had a cool experience, and I love telling the story, and he knows this story. I was having dinner with a dealer that's about 10, 12, 15 years younger than me, great friend, brilliant guy. And he came and walking into this dinner with his wife, and we had some other people there. And I said, man, you look like you had a good day. He said, I had a great day. He said, we had a sale today, sold a bunch of cars, went out and played 9 holes of golf, my wife and my buddy for his birthday, had 6 or 8 beers, chipped in twice, hired a new young salesman. I go, wow, that's a great fucking day. That's amazing. I go, where'd you get a new young salesman? And I'm not going to name, I will. He said, I hired Cam. I said, what? He goes, I hired your son. I'm like, what are you talking about? And I had no idea about this. And I'm giving him all the credit here. He was a very intelligent, successful. He's getting ready to graduate college, doing some amazing things. But he was looking for a summer job. He had seen enough of the car business. He knew the dealer. He didn't know him like best friends. But he called him out of nowhere and asked him if he could come learn how to sell cars for the summer. He's 20 years old, which was, a proud moment that you took the initiative. And my friend said, yeah, come on, let's do this. And it's an hour drive both ways, and he went and did it. Now, when he was growing up, by his choice, he went to a very nice private high school with some affluent people, way more affluent than we were. And they did nothing but shit talk him for that summer because he was a lowly car salesman. Now, the reason why this is great parenting advice is my son got a dose of life and reality and people at a very young age, ahead of his peers. That today he would tell you, wow, did I learn what people can be really like? So, I'm going to protect the innocent. I understand the wokeness or the conservativeness, whatever direction you want to go, but he got a taste of it. And that speaks back to this legacy. So if there's something I'm proud of, that he recognized, okay, wait a minute, what does that path look like? And he took a taste. Whether he goes back to that path here soon enough when he graduates college in a few weeks, I don't know. And he'll be successful. But that lesson is what I would tell people. If you want to get your kids a really good lesson, put them in a situation like that. And you're laughing because it's like, oh my gosh. And you'd also laugh at the phone calls I would get as he was leaving a dealership. Some days, wow, it was amazing, it was great. And some days, it sucks. And oh my God. And I'd be like, just shut up and, do your job. But that's the legacy kind of stuff that makes me think about it.
It's also a good parenting testament to you that he went back to college.
Oh, yeah.
How many of those stories have we heard?
Oh, I threatened a sales manager.
Okay,
That's like,
I just
oh my
want
God,
to
this
be
kid's...
clarified. That's a
Oh,
lot of the stories I hear of how I got into the car industry.
Right.
As I took my summer off from school.
No,
I went
no,
to
no.
a dealership, $50,000 later. I'm not going back to college.
Right.
Right.
No.
So it's a great testament to you.
No, there was threats. There was a sales manager that was a gypsy sales manager that worked there, and he pulled me aside. He's like, oh my God. And this guy ran gypsy sales. Guys that, they're hustling, they're running out there. He's like, this kid's beating my guys out there and he's doing this. And I go, if you say that again, I have a 9mm in my car. We'll end this conversation really quick. And he said that. He said, no, I'm going back to school.
That's funny. So I got my nephew a car working at a dealership at 21, 22. He had him and his girlfriend were going to get married, was having a kid. And he's like, I need to make some money. And he lasted a little bit and ended up going to work for his father-in-law's business.
Sure.
For a better work-life balance. But I remember the phone calls of, man, I spent 3 hours a day with the lady. It wasn't a deal. And I'm like, what happened? He goes, well, the bus dropped her off. And, and he all the other salesmen were like, oh, you go take that one.
Right.
You're right. So I just love those phone calls of them being so eager, not knowing, right? Bus drops the lady off. He is like first one to that lady. 3.5 hours later, he's like, I took $1,000 loss, but I sold the car today.
There's days of excitement. There's days of depression, and that speaks for any business that you're in. But I used to tell the story to somebody, the difference between working in the car business and where we are. It's the difference between stand-up comedy and filming a movie. And there's a famous story of Rodney Dangerfield, filming Caddyshack, and he thought it was absolutely terrible. He thought he was terrible because he wasn't getting that instant gratification back from a live audience. And he was in a studio with a bunch of people, and it was terrible. And there's some truth to that in our car business. It's instant gratification, but the long haul, if you work it, and we began some of this with what I always called the sales professionals that knew how to work the process and the follow-up. And it's sad. I don't know what changed it, when it changed. I don't remember having more than a couple of guys, a few that I worked with 30 years ago that had a regular clientele. Right. That's what you were speaking of. I don't see that as much anymore, especially not in metropolitan areas, maybe more so in some of the rural areas that they've developed that. Like, your son or daughter, you're going to go see Shannon because that's where we buy our cars from.
I got a guy, I got a gal.
How much of that do you think is a training? How much do you think that's a generational? Like, because I agree with that. Gone are those days, the 10 years. 10 turnover dealerships always been high. Let's be clear.
Correct.
If we get out of the rural areas, it's always been high. There are some dealer groups that have learned how to provide a better balance to where the turnovers,
I think it's like a training. That's what I was going to ask. It's like a training.
It's so much, yeah.
The best salesman I ever saw came for us, and he came from another dealership. It was the first time he'd worked at a dealership, and he was middle-aged by the time that he came to work for our dealership. And I want to say he took ups for a year and never took another up for the next 10, 15 years of his career because he came from an industry before that taught him a little bit more structured steps to the sale. And the steps to the sale, what I'm talking about, are not the automotive, the walk around and this and that. I'm talking about a corporate level. And I ran into a finance manager one time who a dealer had hired from a bank. And I went, they've not necessarily been good bankers. The bankers haven't been necessarily good finance managers. That's not, I hate to be a generalization, but unfortunately I've seen it happen too many times. And this guy was a rock star. And I'm like, okay, let's talk. Where did you come from? Well, it turns out his dad was a Rainbow vacuum salesman, and he became a Rainbow and he'd gone through this regimen of training. Fuller Brush was the benchmark 100 years ago, but that was immediately noticeable. And I don't think we as an industry, unless you engage with, and this is a prop to a guy like Brian, it says, listen to me, if you follow these processes and steps, I'll make you a career.
It is the system. We have always been subjected to the turnover thing, but I think where we have gotten lost, and I think tailwinds of COVID have obviously exposed it to a such an intense degree, we forgot how to build a system composed of processes and held accountable to the daily habits that lead to that kind of success and professionalism in our industry, period, end of story.
I agree. And I think, so one of the things I like about our industry is we hire anybody.
Yep.
Right? One of the things we struggle with.
We need everybody. We need all kinds.
One of the things we struggle with in our industry is we hire everybody.
Right.
Right? It's a double-edged sword from an industry standpoint. I mean, we work with the top 10 dealer group, and I won't name them, but everybody there goes through behavioral testing.
Yeah.
Everybody has assigned. They wear name tags with their with whatever their behavioral sign is on their name tag. And when you move to another dealership, the people you report to get an email that this is how you are, this is how you need to be coached, this is how you need to be managed. And they run their entire organization using that method, and their turnover rate is dramatically lower than anybody else in the industry because, one, the amount of training they put into building the right team and knowing how to have proper communications, and two, they show you career pathing, right? Dealerships need to demonstrate career pathing
100%.
to their employees for them to retain them in the long run.
This silly book literally has an entire chapter dedicated to that.
Is this the book you wrote?
We're going to stop talking about it, but yeah, it is. I can't here. I get extremely jingoistic about the car business, and I've talked about this on podcasts before. I've talked about this at length. I posted about it on LinkedIn on the way here today. My entire belief in our industry is that it is the greatest representation of the American dream today.
Oh, I agree with
Automotive.
that statement.
It is the only career path left. And again, we can say anybody, and there are right ways to do it, right ways to onboard, right people to hire. All those things are correct. You're opening my eyes to a million things as far as perspective goes, Shannon, just in that statement you made prior to this. I believe it is the last industry where you can go from mailroom to CEO, right? You can't climb that ladder like you did, right, with Fidelity any longer.
Oh, I'm never going to be the owner.
Right? You can't start in the mailroom and become CEO. But in the automotive industry, you can literally start as a porter. You can start as a salesperson. You can start as a technician, and you can own a dealership.
Great.
It's the only industry left that you can do that in America. And it sounds cheesy, and I get it, but you can't challenge me on it.
No, it's true. So I did a class in El Paso, and we certified a bunch of people. And when one of the classes, I had a lady in full emotional breakdown after she passed because she's not from the U.S. She came over from Mexico. She worked in the janitorial services. They moved her to another job. They realized, hey, she has talent. They supported her to get a GED. She moved into sales. Now she's in finance.
Wow.
The guy sitting next to her literally has a PhD in rocket science, hated what he was doing, and now he's in finance. So I got two people on opposite ends of the spectrum making $250,000 a year. She's in a full emotional breakdown because it's the only thing she's ever accomplished where she can put a sign on her wall like a diploma that she's accomplished something.
I fucking love that.
Next to a guy that was laughing like, he said, this is a great course. I could have just done it online. He's got a PhD in rocket science, right? But I love the auto industry for that level of discrepancy in who gets started.
Absolutely.
The problem in our industry is the same thing.
Correct.
Nobody comes in with the same inherent level of knowledge. If I go to the real estate industry, if I go to the finance, if I go at a lot of other highly regulated industries, there's a standard of education I'm required to have before I get started.
Correct.
So as much as I love the industry for the discrepancy of what you talk about, it's the most amazing industry for it, and I love to hear stories. One of my favorite questions is, how did you get into the auto industry?
Yep.
Because what's the joke? Nobody ever chooses to be here, but they never
Nobody's
leave.
guidance counselor ever told them that this is what they were going to
But they never leave when they get here because it's an amazing industry.
Correct.
And I've watched people who would never be able to provide for their family provide at a level they never thought they would because of this industry. And I love it. But the problem is it's also the same thing that this industry struggles with, is we don't come in with the same inherent level of knowledge.
Couldn't agree more.
And one of my favorite stories, and I apologize if I'm taking this longer than it needs to, but there's a gentleman that works for
literally all day.
There's a gentleman that works at a store, a Lamborghini store. And I was like, how did you become a salesman of a Lamborghini store? And he says, oh, I'm going to tell you. He's like, I came over from an Eastern Bloc country and I was washing dishes at a restaurant. And somebody says, hey, there's another restaurant that's hiring for $2 more an hour. Go to the city library and go to the job fair. And he didn't understand English well enough. And so when he read the sign, he took a left and not a right and ended up at a Nissan hiring event, not the restaurant.
Wow.
So he said, I got hired. I thought I was dishwashing. I was halfway through the interview when I realized that we were talking about selling cars, and I was embarrassed. So I went ahead and said yes to everything. They hired me, and he didn't know any better. 2 years later, he was the #1 Nissan salesman in the year, did it for a couple of years in a row, So then the owner was like, "You're amazing. I'm opening a new Lamborghini store." So that's his job, is he sells high-end cars, and but he was like, my whole story is I didn't know left from right at that point.
Thank you
That
for
is
telling that. That's a
unreal.
good one.
That is
It's one of my
unreal.
favorite experiences.
I love that
Just
story.
a good dude to the core.
Let's make a segue,
All right.
because again, this has got to be part one of multiple podcasts. So let's talk about the mission, training, and philosophy of AFIP. But first, I kind of want to frame this as we move on from this. I'm going to pose a question, but as we dig into this part of your career arc, I unfortunately, I think we just talked about process, but I think a lot of people talk about process when they mean control, unfortunately. And I think a lot of people talk about compliance, but they mean fear. How do you define that as it pertains to AFIP?
So I don't think the best protection is a process, right? If a dealer is being investigated, if there's a lawsuit, if there's a complaint, the
Right.
best way I can protect myself is process and adherence to a process. And we're guilty by association, or we're guilty until proven innocent. And the biggest thing that hurts a dealer is a lack of documentation on why they do things. So the reason why we preach the process as hard as we do, because it's the best defense that a dealer has.
Yeah, I think that's fair. And again, it's proactive versus reactive, which unfortunately plagues our industry, right?
It is. If we look at dealers that have been fined, if we look at Coulter, we look at Rylander, we look at, Asbury didn't pay the fine, but if we look at
Right.
Asbury, if we look at, we go down to Napleton, we go down these dealers that have all been fined for disparate actions. Do I really think that Coulter said, "You're Latino, I'm going to charge you 2% more rate"? No, I really don't think that was their philosophy. But when the government said, "How do you handle markup over buy rate because you have a discrepancy," and they had no policies or process, they couldn't answer the question.
Correct.
And we talk about dealers that paid fines all day long. What we don't talk about is the dealers that had the same questions from auditors that were never fined because they were able to defend their actions through a process. Right? If a dealer gets audited and says Latinos were marked up 1 point higher than non-Latinos, and the dealer goes, "Well, I have a process, I have a policy in place, everybody at my store starts at a standard markup, and I only downward deviate for this reason," I can now defend what the government thinks I'm doing. I have
Absolutely.
a defense for it.
Absolutely.
But
I
when
don't
first-
pull a credit app first, which unfortunately a lot of dealers make that mistake, before I pencil my numbers, my preliminary numbers. I don't have the language of, we use a 90-day rolling average in our store on pencil. We don't have these things put in place, which are, again, proactive versus reactive in a lawsuit setting.
I saw an interesting one 20, 25 years ago, and the dealer said, "I don't pay commission on reserve." That was it. Just, I don't have a problem because it doesn't impact how they get paid. So, and it was interesting. His people performed just fine, and they went into it, and I'll make the customer happy. I'll give them the buy rate. I'll take a flat, and I'll move on because I don't get paid off of it. I thought it was an interesting way we talked about it earlier. Is how does the higher up get paid, right? So that's how you support their pay plan. And every salesman in every industry, there's a pay plan written for a reason. They want you to, control behavior. That's how he controlled behavior. It was interesting, but it was effective.
There's a dealership in Georgia that he pays his salesman a flat amount if they uncover a deal that is where the person who's trying to buy the car is a red flag, stolen identity, or something to that effect. So he pays them if they uncover those. And he's found that the number of red flags deal, or the number of deals with customers that buying cars that aren't who they are, has gone to almost zero. Because I no longer am fearful that I'm not going to get paid as a salesman for the 3 hours I spent on a customer where I determine they are not who they say they are.
to turn the proverbial other cheek.
Correct.
Blind eye.
So
whatever you
just
wanna call it.
and it's a flat fee. I think it was like $500. Wasn't it like $500? Now, and the salesperson has to approve it. It can't be like, well, they answered a question wrong. right? But he says, the minute I compensated him for that time, all of those situations simply, they've just gone away.
Yep.
I don't have them.
Somebody who knows the acronym, but not the actual, I guess, philosophy behind AFIP, in real time, in real life, what do you guys do for those dealers and finance professionals in the real world?
So AFIP is the Association of Finance and Insurance Professionals, started in 1989. It was started by industry members. So AFIP was a group of leaders in the auto industry that got together and said, I have to protect myself as a dealer for the actions of my sales and F&I. I need to make sure they're educated so they can protect themselves. And that my customers need protection so that the people that they're interacting with have been trained on what those laws are. So at the core, that's why AFIP was created. And we do, I mean, AFIP today, we do a lot more than just that.
Absolutely.
Today.
Yep.
But at the core of AFIP, that's what we continue to push. It protects the dealer, it protects the F&I manager, and it should protect your customer as well. I mean, you've seen it. The AFIP certification is it's a wooden frame diploma that goes in the F&I office. And one of the biggest feedbacks we get from people that are AFIP certified is I love when people ask me about my diploma.
Yeah.
Because it gives me 5 or 10 seconds to say, that's not a college degree, but my dealership put me through extensive training, and I had to pass a certification program on federal state laws and an ethical code of conduct before I could sit in front of you today and do this job.
That encapsulates it all. That is the philosophy behind it, and I love that. Inevitably, we're paying for the sins of the past. Founded in 1989, right? What did the industry get wrong about the F&I role? Probably, in your opinion, hindsight's 20/20, for too long.
That's a damn good question. I always like to repeat the question. My joke is, if you ask me a question I don't have an answer, I always repeat it.
I'll frame it for you once again.
No, I'll repeat it. That's my way of buying time. That's just a trick I learned years ago.
We're here all day, Shannon. You can buy as much time
But
as
that's
you
always
need.
my trick. If I repeat it, it gives me time to think about it. Or my other trick, if I ask the question back to you, that gives me time to come up with an answer.
Absolutely.
So what did we get wrong
For far too long. And if anybody has the perspective you do, I'll buy you some time. I mean, 1989 to now
I mean,
is a long time for us to learn from
I know,
our
I just-
mistakes, pay for the habits and sins of the past.
I think the problem is, I think we spent far too long on overcomplicating the F&I process instead of just simply selling product based on value.
Why do you think that was?
Well, people tell me all the tricks they did in the 80s.
Yeah.
Right? I got my 2-finger close where I put my 2 fingers over the top boxes.
My tie to
You got
flop
your
over.
tie close.
Yeah,
I hate to say this, but somebody said they were taught the boob close because they didn't wear ties.
Good for her.
They would just lean over
Yeah.
the contract and her comment was, nobody ever asked me to move and I could put whatever I want in a contract and
they
just
didn't.
lean right over it.
Yeah.
Low cut shirt or not, nobody asked me to move.
For non-car people, we're talking about literally the disclosure boxes on a retail installment contract. And the trick was to lay the tie over and press hard 3 copies with a pen being handed to the customer.
The other one,
non-disclosure.
I had an F&I manager says I was showed my F&I training was how to fold the contract and where to staple the contract.
Oh, yeah.
So when you opened up the contract, the staple would tear up the payment and the APR and several lines. So that was how we didn't teach how to properly close, how to be transparent. We taught tricks to the process.
I think that's where it was. I think in the beginning, and I'm going back now to the 80s
We're going like
and
Pat
before,
Ryan school.
of course.
Yeah.
And it was, here are the tricks to be successful.
To justify bad behavior. That's
Yeah.
what it was designed for.
Yeah.
Well, and I don't want to call it Pat Ryan. I mean, he is the Pat Ryan created the F&I office. Let's be very
Correct.
clear. He's the innovator. He's in the automotive.
100%.
So Dave Robertson campaigned Pat Ryan get into the Automotive Hall of Fame. He's one of the only non-racing people in the Automotive Hall of Fame. So we definitely give him credit for what he created. But to your point, there were tricks that were taught back then that were not about transparency of what they were
Let
buying.
me teach you a shortcut. Here's the Cliff Notes.
Yeah.
Yep.
Instead of reading the book, here's the Cliff Notes.
Was it the Alpha Dog that created the FedEx clothes? Jim Ziegler.
Ziegler, thank you.
Very
created
well
the
could have
FedEx
been.
clothes.
Never flew in the back of any plane and always had 2 Rolexes.
There you go. Well, that's yeah,
God.
right. And
God rest his soul.
yeah, I mean,
Yeah,
Hey,
absolutely.
and he, you know what? He helped a lot of people be very successful in this
For sure.
industry, and he was a great mentor to a lot of people.
Well, we
But
do.
we're back to your point on we work too hard on to your point on tricks to do things instead of just saying, here's what it is we're selling, here's the value, here's what you're buying.
If there was something I could change, just personal experience. I mean, working in the box through the late 80s, through the entire 90s, it was, I mean, it was volume. And I think that was a ginormous mistake because there were months I'd, see 120 customers, maybe a little bit more, but it was always a big number. And it's been an ongoing debate with me with dealers for the last 10 years of that was stupid. And it makes me cringe every time I see an article, it takes too long in the F&I office. That's bullshit. The reality is give the customer the value of whatever time they want. And there are people who are more long-winded, but you know what? A lot of them care about the customer, want to have a conversation with the customer and take care of their needs. And I think it was a balance of greed. And I can name a couple of finance managers and I met probably about 15 years ago, between 10 and 15 years ago. And they thought I was the devil reincarnated because I'm telling the dealer, you got one finance manager, get 2. You're taking money out of my pocket. No, I'm not. I'm going to make your life better. You're not going to stress as much. You're going to take your time with the customer. You're going to be more productive for the customer, for the dealership, and ultimately yourself. And I haven't been wrong. I mean, I'm not right all the time. Ask my wife. But in this one, I've been dead on accurate every time I've told the dealer, you need one more of this. And eventually, that finance person comes back to me and says, thank you. I had one call me in the last months of his life. He was dying of cancer, and it was one of the most emotional things that ever happened to me in this business. And he said, you know what? I know I fought you, and I know I was really hard to work with, and I didn't want to pay attention to you, and I didn't want to do what you asked me to do. And all those things you were doing, you were just trying to take care of the family that I worked for, and you were doing the right thing. And I just want you to know I know that now, and I thank you for it. And it was very heartwarming. It's one of those, medals you want to accept. But that's a change that 40 years ago when I started doing that, nobody would have agreed to it or understood it. And it's the right way to think of it.
Well, I'm going to lead this back to you, Shannon, in a sec. We made a differentiation between bad actors and good actors. The bad and good thing is not necessarily the truth in our industry. What is true is specifically to the F&I space. If you mandate or based on the amount of volume you're doing, you have a finance manager touching 100+ deals a month, they cannot be compliant. I would argue that there's always an opportunity to be, but it's very difficult to treat every single deal with the same care and attention it deserves when you're talking about amount of volume like that. And we're going to piss off a lot of finance managers that watch this particular episode with that statement alone. Well, don't dig into my back pocket, sir. I can't allow you to do that. Well, to be quite honest and quite fair, the customer experience is going to be better. The dealership's going to be more protected. You're going to make more money. And oh, by the way, your wife's going to be happier because you're going to be able to come home for dinner and put the kids to bed, right? Instead of staying late and doing all the things that we're forced to do based on our job description as a finance and insurance professional.
But that's an entire cultural change from the top down.
Correct.
Right. I mean, my grandfather brags that he never took a sick day his entire life.
Right.
Right. My dad will tell you he probably took 2 vacations that his entire every family vacation had a business tag on.
Right.
Right. We're going to go to Colorado to a Bronco game, and by the way, we're going to fly up Friday because I have a business meeting. Right.
Right.
And I'm not saying that that was a bad thing, but that was the mindset. And I mean, and that's how a lot of us were raised. Like, I mean, and then one of the things I liked with Fidelity is you had to use vacation, right? I got a lot of vacation, and I was, and it took a while for me to gain the mindset of it's okay to go on a vacation.
You talked about turnover a minute ago. It's one of the causes.
Well, it is now.
You're going to reduce your turnover if
Guaranteed
you
it is now.
Work-life balance was never a priority of an employee
in the car business.
40 years ago in the car business. And I think we've caused that change, right? My daughter, her husband. So, and not to tell their story, I hope they don't mind, but my daughter and her husband got married at a young age. My daughter's been an adult her whole life. Her husband's been the same way. But he was working as a service director at a Mercedes store, making good money. She was running he was going to school. She was running the office for a chiropractor. And they called me and said, we were in our mid-20s. We work 70, 60 hours a week. We see each other on Sundays when we do our laundry. We're not enjoying our life. We're going to save up money and we're going to move to Florida. Can we talk about it? Right? I can get a good job out there. I'm going to work my 40 hours. I want to have kids. She wants to be a stay-at-home mom. And it took me a minute to grasp the concept of why you wouldn't work 70 hours a week at 24, making 150. I mean, he was making really good money, right? Because he was one of those kids in college that was a porter and moved up to service manager, making good money. I joke at a Mercedes, people they buy, don't lease, so they actually pay for service.
Right.
But he was making really good money, and I remember telling my wife, I'm having a hard time with the decision, not because they're leaving, because they lived close to us, not because they were leaving, but I don't understand the concept of why you wouldn't work those hours for the next 10 or 12 years for something in the future. And they moved to Jacksonville.
And there's nothing wrong with doing that at some point in your life.
Agreed.
To learn hard work.
Correct.
I mean, that's
well, and their comment was, we don't mind the work. We don't like where we are in a relationship because we don't see each other.
right.
Which should be I say this, I'm your typical car guy. I've been divorced twice. I'm not proud of that stat by any stretch of the imagination, but I have what would be labeled as some kind of workaholic symptom. But again, it's who I am. It's what, it's in real time. I'm struggling with how I respond to any of that, because you're 100%. Your whole premise of that was, I don't understand it. I don't understand it. Shannon doesn't understand it.
I didn't.
Right?
Now they moved to Jacksonville. He got a job working for a home builder. He's working himself up. They live, they were living 10 minutes from the beach. I've got 2 grandkids. She's a stay-at-home mom. He provides. Now is he making the money he was as a service manager? No. But do they live within their means? Do they have dinner together every night? Do they walk the beach with their kids? They have an incredible work-life balance that I'm envy of, because at that age, at that age, I worked as much as I could. I didn't know that I was supposed to be around,
Right.
all of those hours, for a kid at the house. I thought my job was to work as many hours as possible.
We've got a little bit of that Sisyphus pushing the rock up the hill mentality. And yeah, we do have to perceive that he was happy in his venture. Otherwise it would mean nothing, right? But that is kind of what we do. I remember my mom retired. She's probably going to hate the fact that I'm telling this, Shannon, the same way that you told your daughter's great story and son-in-law's great story. But I remember my mom was running auto glass for 3 states, North Dakota, South Dakota, and I think Minnesota. And this was the kind of job where she'd be on vacation. They'd fly her back for 3 hours just to know when her original company got acquired by the next company. And they'd say, okay, Chris, you're the right person for the job kind of interview. And I remember her retiring, and she does not remember this, by the way, but I know this is a framework for the rest of my life, so I know it happened. She asked me, what do I do next? I said, Mom, you enjoy life. Like, go on vacations. And again, it registered with me more than it did with her, because she had a plan. She had a home in Arizona, and she had all the earmarks of a happy retirement and all these other things. But to some extent, if we're not enjoying that time, and again, we're going back to the work-life balance in automotive and recommending to finance managers that, hey, there is a maximum amount of deals you can do, and I can get you home with your lovely bride more frequently and your kids and all these other things. But there is something to be said about, we work until we don't work anymore.
In this business, unfortunately, there are not a lot of retirees.
This is why, I mean, and we're probably way too honest, but this is why my dad struggles in retirement.
Sure.
Dave's retired. He doesn't admit he's retired, but he's retired because his life hobby was his work. And I love that about him. There's a reason why he was as passionate and he gave as much time as energy as he did into AFIP, because it was his hobby.
It wasn't about money.
It wasn't.
Yeah.
His work was his hobby.
Correct.
People in retirement enjoy their hobbies. The auto industry, your work becomes your hobby.
Yeah.
So when I retire, a lot of people don't have hobbies.
I've gotten to that age where more and more people are asking me, non-car people ask me, when are you going to retire? I'm like, I enjoy the passion of what I do and helping the people I help and work with. Why?
I used to shake my head. Retire? What do you mean? I become a turtle that does dealer trades? That's retirement for me. I don't see it. I'm still going to be in the dealership, buddy.
Yeah.
You're not getting rid of me.
I could see myself doing that. Yeah, sure.
So my wife and I are having a conversation. My stepdaughter's 17. She's got a year left. And we're joking, what are we going to do when we become empty nesters? Like, we're going to need, I don't want work to be the replacement of what we do where I come home, because she runs the office. So, we have to have very clear boundaries. We try to avoid work talk at the house at the end of the day.
Right.
Because then if not, work is all we know. So one of the conversations we've been having is to help me find and her find a good balance in life, is what is our hobby going to be when she's no longer in the house, right? Because she's in softballs. I mean, that eats up a lot of time. So when she's gone, I don't want that to be replaced with work talk at home.
Is your wife a diver also?
She is not.
Well, then
there is an option, right? But
is there good places anywhere near you?
No, I'm in Texas. There's nothing close by.
I don't know if there was any, lakes, caverns,
it's
mines.
There's stuff, but not enough. So we joke like golf, pickleball.
Yeah.
We've been, and I could go longer on the story. There's a dad scooter club. We've all bought scooters. My wife's got like a 1985 Spree, so we ride our little scooters.
That's awesome.
So we have found things to do, but that's kind of that's one of our goals, is to make sure that we find a good hobby in replacement so work doesn't fill that void.
Which is exactly and precisely what your daughter and son-in-law did proactively early on instead of.
Yeah.
I love that. You've obviously been part of the certification and training efforts for years now, whether you were directly involved or not, and or involved with Fidelity in that aspect as well, as far as compliance goes. What does separate top F&I professionals from the rest? And I'm not discussing like the highlight reel. I caught this red flag here. I caught this there. Or what does separate
those that know their products?
Yeah.
I mean, if you really want to be a good F&I manager, you got to know your products better than anybody else. In my opinion, it's the boring shit that makes us successful. And we could put that into a lot of different areas in life, right? But there is secret sauce. There are people that just have a secret sauce, that they have something nobody else has.
Right.
But if we just take an average F&I manager, and I want to be successful, if you know your products better than anybody else, then you sell them with the value and a passion nobody else has. Right? And you guys might have difference of opinions. I'd love to hear your answer to the question.
Tell people they buy you. If you're believable in your conviction of how you're describing the benefits to that customer, and you are truly offering them what they need, not what you want to sell, there's nothing going to get in your way.
But the only way they know that is to have what?
Knowledge.
That's it. I can't answer it any better than that. If you were to spend a week in a store and you're there for the day-to-day, you're just observing, how do you identify the pretenders from the ones that really care about compliance?
Just watching their process, the consistency.
I think the consistency's it.
Yeah.
If you're consistent to whatever the process is, you will figure out if they're consistently fraudulent or consistently compliant.
I mean, we have an auditing division of AFIP. We have a full-time auditor, and the joke is, how many deals do you audit? And he audits a lot of deals.
Right.
But he says, I audit a lot of deals because that's what they pay us to do, but just give me 5 deals. Yeah. Like, that's kind of his joke, is finance sales managers and desk managers are creatures of habit.
Give me 5 deals or 5 minutes.
Yeah.
I can tell.
Yeah.
Yeah.
And let me be clear, he's like you. He grew up, he's been a GM, he's been a lot of, he's served in he's been every position at a dealership. So he knows the industry well, but we are creatures of habit, and I can pretty much pinpoint very quickly what your habit is.
So how knowing that,
But consistency is key.
consistency is key. And again, not just in lawsuit. We don't just want to prove consistency. Consistency is literally how you get there. I want to make that distinction.
It's success in life and everything.
Everything. So there are finance managers that come in with preconceived notions. There are good, bad, or otherwise. How do you break those habits that could expose a dealership? Because again, what we're talking about is eliminating exposure in our
There's a
world.
knowing and a doing issue, and I'm stealing this quote from
Nope,
somebody
I love
else.
it.
But there's a compliance officer that I respect who's retired and now consulting, and he says, I built my entire career off the difference between knowing and doing. Right? When I transitioned from Fidelity to the auto industry, I came from a very compliant organization where there was a very large HR department.
Right.
Everything had to be documented. Everything had to be done. And then I moved to the auto industry where somebody was yelling at me for something that I didn't do, that I didn't know I was supposed to do. And it took me a minute at 38 to grasp why another grown-ass human was yelling at me. I didn't understand this world, right? And we had a different conversation on the side because I don't allow you to yell at me, right? But my comment was, if I screwed up bad enough, fire me. If I didn't know, train me. Right? There's two ways to look at that. And I didn't care. I mean, I don't. But all I kept thinking about is if I'm yelling at a 20-year-old for something they didn't know, I've just, for whatever I've done, I've just destroyed that person and their potential ability to be successful. Right?
100%.
So I think the first thing that you do is you identify what is the knowledge level. And you make sure everybody has the same level of knowledge. And once that's done, then you determine, is it a doing issue? And if it's a doing issue and you've trained them and you've done everything you can, then it's an elimination.
Yeah. I have used that for a majority of my career. There's two types of problems. First one is knowing, that's on me. Second one is a doing problem. That's a middle finger to me.
Yep. That's when it's true.
It's
I
true.
might steal that statement. I like that.
You can.
Well, there's a white paper written by a Harvard professor a while ago, and he talked about hiring to inadequacies. Right? And you said you talk about this in your book in a different way.
Correct.
But in our industry, we need to be better at feedback, and we need to be better at identifying people that don't have the ability to do the job they were hired to do and moving them on, instead of not providing the feedback, changing the rules to accommodate what they cannot do, or promoting them to inadequacies.
Well, and it was literally the basis for this entire question because, and to that end, we have all, as operators, I'm just going to isolate general managers, for example. We have all taken the finance professional who has a long resume that has jumped around to multiple dealerships that runs $2,500 to $3,500 per copy. But with that comes CIT issues. With that comes culture issues. With that comes everything else under the sun that creates another job for me. But I need that gross to trickle down to the net. As a GM, that's where I'm looking. And unfortunately, we sacrifice that exact office for a bad actor who we think we can grab our hands and wrap our hands around and do the job for them, essentially.
And I argue that you really don't see the benefit of the income because
Zero.
of the other options. I was talking to a gentleman that runs an agency, or runs a company, I'll leave it at that. And he said, I pay claims at a higher percentage than another company does. And the percentage difference wasn't much different. But he said it was enough of a difference that I have one person in my resolution department. They have 7. Right? So he said, are there some dealers that take advantage of my high claim percentage? 100%.
Sure.
But my out the door income is much better because of the fact that I have less cases that need to be resolved. Right? If I'm canceling claims at a lower percentage, I create more issues that I have to have a department to deal with.
What
They're paying these 6 other people far outweighs the difference in what I'm paying in percentage of claims.
Right.
Right. So I argue all the time that by hiring that, what you think is a rock star because of numbers, but creates nightmares where now I have to have additional employees. I have to have a babysitter, right? I argue that you don't see the net result in that income because of that. And I get the statement a lot from dealers. I'm not payment packing, but I have this older employee who's just done it this way forever. I'm not payment packing, but I have this new guy that can't close, so he needs help with some products. You're still payment packing.
You are payment packing.
Regardless
100%.
of what the exception is, right? And I don't think it's not a bad conversation. I think a lot of the times why we don't fire somebody we should is because it's an ego thing to ourselves, because we hired them and we don't want to admit to everybody else we maybe hired somebody that we thought that could do the job that couldn't.
Or we're feeling the pain of the desperation to hire him to begin with.
Agreed. But I don't think there's a bad conversation of saying, I hired you to do the job. You just don't have the skill set.
Right.
I thought you did. You thought you did. You know, I felt like I've given you all the training. You have the knowledge. Unfortunately, I can't be any more patient with you at this job.
Yeah.
I don't think that's a bad conversation.
I don't either. And as a general manager, I don't want to be your assistant finance manager any
No.
longer. So let's move on. Let's talk about the state of the union currently in 2026. Let's talk about what's noise and what's real. Let's talk about the CARS rule. A lot of dealers, we clarified this earlier, heard it got vacated, and for whatever reason, they decided that the danger had passed. That may not be entirely true based on perspective, but I know plenty of dealers that unfortunately felt that way. But what did the CARS rule try to do when it got struck down, and why was it not the same as the pressure going away? Meaning, what changed in that rule? What are we staring at now? And what are the differences that a dealer should recognize immediately?
Yeah. So at the core, the CARS rule itself, or the vehicle shopping rule, I don't think what they were asking dealers to do was wrong at the core.
Right.
I think the obstacle and where we saw the problem was the amount of disclosures they were requiring.
Correct.
I don't think a rule that says you have to have the price that you price online has to match the price on site. I agree with you that you need to be clear on negative equity. I agree that if you're going to show voluntary products, the customer has to know they're optional. I agree with the core of the CARS rule. What we did not agree with was all the additional disclosures required to it. Having to show all my product prices online and every advertising. I mean, there were extremes to the rule. At the core, I think it did some good things. I think they just went over the top with it. So
do you think it was all faulty at the dealership level, the execution side of things? Is that where the break was? Or did you think there was anything in excess that they were overstepping
I just
in
think
the original rule?
It wasn't realistic in what they were asking for in terms of a disclosure process.
Gotcha.
Right? I don't think it's realistic for a car dealer on their website to have a page of every product they offer and what those prices are.
Because, you know, one of the things, and I've had this conversation, is it's what the limitations are. So let's say you have a set price for a service contract, and every customer that buys an F-150 pays that price for that term and level of coverage. But along the way, one of those customers has a negative equity trade. The finance company is over-financing for it, and then comes in and says, hey, this is the most amount that we're going to allow. Well, the only way the customer can get the benefit is either A, it has to be sold at a different price point, or B, and the customer's got in equity for a reason, they probably don't have the money to put down to bring it within the terms where you could still sell that same regimented service contract price. So what's the right answer? And I don't think there is one. I think you accommodate and you adjust to take care of the customer. So then somebody that's completely left-wing is going to come in and say, well, then you should sell every customer at that. No, that's not realistic.
It's not. And under the CARS rule, I mean, if I'm a Ford dealer, I know what a service contract is in F-150.
Right.
can I put online what my ceiling price is? Yeah. But what about all my friggin' 500 used cars? If I got to put on my website what my price is, there's no way I'm going to be compliant.
Not today.
No,
Jeez.
there's not. Right? What if it's a BMW? What if it's a Land Rover? What if it's a Nissan?
If it's a Land Rover, no, I better not. I won't say it.
Protect the innocent.
We all know
Steve.
You know where I was
I know
going.
where we're going.
Okay.
Protect
So,
the innocent.
I think if they had just taken 2 or 3 things out of the cars rule and to do these 3 things and not required all the paperwork disclosure and got rid of all the other crap, I think it would have been different. The FTC letter, in my opinion, was the parts out of the cars rule that was the simplified version of it.
It was extremely concise, right? Extremely concise.
And it was
So
very simple compared to the complexity of the cars rule.
And we're going to get into that letter as of March 2026, I believe.
Well, and the other thing I want to add is
Yeah.
when we have we might have a new president the next time around. If
Right.
that's a Democratic president and we have now we're going to have a Democratic head of, commissioner for the FTC, they could take that cars rule off the shelf and go through the process and try to put it into place.
So with that being said, the follow-up question I wanted to ask was, what do you believe, and we're going to get into the letter, but what do you believe I'll phrase it like this. What was omitted that A, has a chance of coming back, or B, should have been included in this letter, in your opinion?
I don't know so with the letter that came out, I don't know if we'll see the cars rule ever come back in the form that it was written, right? Could we see an abbreviated version of it? Possibly. I don't think we'll see somebody come in the next 2 years, go to the storage unit, pull out the rule and say, here's what we're doing, right? I don't think we'll see it at that level. All right. So let's take a step back. There's 2 ways a dealer can be fined. They can be fined by violating a written rule, which is a set dollar amount that's adjusted per year, right? For 25, it was $53,088. They adjusted every year for cost of living.
Yep.
The second way a dealer can be fined is under what's known as a UDAP violation, and UDAP stands for unfair and deceptive acts or practices. So what the cars rule did at the core, other than the disclosure requirements, is it took some items that are considered to be potential UDAP violations, and they put them under the actual written rule violations. That's
which are subject to that specific fine.
That $53.88 per violation.
I want to make sure that people know that clearly.
Yeah.
That by elevating those, they would fall under the black and white fine. You get hit with this.
Can't do this.
Yep.
But what the letter said is that there were items in the letter that were going to be under the cars rule. But what the letter said is these are things that even though they're not written violations, we're giving you a notice. These are considered UDAP violations if your dealers are doing this, right? And what makes UDAP so scary is there is no cap on a UDAP fine. And I don't mean to make it rhyme, not to sound like a middle-aged M&M, but it is what it is.
We're all middle-aged M&Ms.
But
Eminem's middle-aged, by the way.
Yeah, he is.
Yeah,
I think he's our age. Anyways,
we are Eminem.
But
that's what we meant.
But to that point, that's literally what the letter says. These are items that if you do these things, we're going to consider them a UDAP violation, and you can be fined for that. And that fine can vary because it's under the UDAP umbrella.
I think that is a huge distinction that needs to be made. So let's fast forward to March 2026. Let's talk about the FTC letter. Specifically, it sent a warning letter to 97 dealership groups.
1,000 rooftops plus.
1,000 rooftops
plus. So those 97 dealer groups, the last number I heard was represented over 1,000 rooftops.
Over specifically, it was 2 bullet points, but specifically
6 bullet points.
6 bullet points? Okay. Deceptive pricing concerns. What is, and I know you've got it with, so let's break out that trusty letter. What are the concerns, but what is the signal behind those letters? And I don't mean, Shannon, you said it completely accurately. You are a visionary on this side of the industry or the industry as a whole. I'll pay you that compliment, give you that rose of 100%. We're believers in that. So what I'm asking you when I say what is the real signal behind it, I'm not asking you to predict legislative changes. I'm not asking you to predict next president and what they might do, but what is the signal behind those letters, and what were the concerns that were detailed verbatim on that letter?
We're going to go back to consumer complaints.
Yep.
Everything we're doing is pointing to consumer complaints, right? When the CARS rule was officially announced, I don't know, it was 392 pages, whatever the pages it was. But the first 50 or 75 pages was an overview of the increase in complaints post-COVID, right? So when they said, here's the CARS rule, the justification for it were consumer complaints, right? We've seen an increase in the average negative equity on a deal. The government believes that we're not properly disclosing negative equity to a customer.
Right.
Right. There was deception during COVID. You know, COVID created a very competitive market for vehicles available and pricing. Right. And that's what I think put the extra emphasis on vehicle pricing really happened outside of service was a lot of COVID driven. Right. Because it had to do with what dealers actually had your vehicle.
Lack of inventory.
Absolutely.
What should be a
Supply and demand.
should be
Right.
a college level course on supply and demand. That's what
Agreed.
COVID taught us.
And that's what drove that. And
Yep.
so, right, if I, so dealers weren't always transparent on what vehicles they had on the lot, right? Honda ran this lease special for a Honda Civic lease special during COVID. They didn't call it a COVID special, but it was a lease special, right? But most Honda dealers didn't even have those cars on the lot, right? But if I called and said, hey, there's this lease special, the dealer would say yes. They're not getting a lot of customers. They didn't want to tell me that they didn't have any of those cars available. So I drove 2 hours to get the lease special. That model's not available. Now they're trying to work me on a different model. I don't blame necessarily the dealer for those actions during COVID because it was hard to sell cars because inventory was low. However, it was not a very transparent market. Right. So that's what drove a lot of, from a government standpoint, the justification for some of those CARS rule changes.
more tailwinds of COVID for sure. Which
Right. And some of those business practices didn't change. The inventory is no longer a shortage, right? We didn't change some of those business practices. And there are sales trainers out there that will train you. You tell the BDC and salesperson tells the customer the car is available even when it's not.
Right.
Right. So there wasn't training during that process, or once the inventory was no longer a concern, right? You know, we didn't change our model. Market value adjustment was never a conversation pre-COVID, right? There are cars that have had market value adjustments forever. G-Wagons, right? High-end cars have had them forever.
Absolutely.
Right. Post-COVID, now we're having these discussions all the time on market value adjustments on Civic Type Rs and vehicles pre-COVID that would have never had them. Right. So some of the behaviors didn't change, which led to the government saying, now we need to put some additional rules into place. In the FTC letter, I mean, one, the main concern is the online price does not match the on-site price. Right. That was concern number one. Right. The second concern is that we're advertising cars to customers with discounts that aren't available to all customers without
Correct.
properly disclosing that online, right? And then there are dealers that have dealer requirements. If you want to finance and you want to get the vehicle at this price, you've got to have in-house financing. You have to have a trade-in. They were not disclosing that online when they were disclosing the dealer special pricing, right? So that's what the letter says. If you're going to have dealer special pricing and you have restrictions on it, you have to put those restrictions online. And then the last was just advertising vehicles that are unavailable or,
known to be unavailable to just,
or non-existent.
what is the term? Bait and switch? Is that what?
Well, just unavailable. I mean, and some of it's not a dealer's fault. The minute I order a vehicle online to the manufacturer, regardless if it's an allocated car or not, it immediately shows up on my website.
Right.
So Porsche dealers are doing custom 911 orders. They're showing up on a website, even though they're not available. So the dealer just needs to make sure that on the website they clarify unavailable, not in, or in transit. If it's not on the lot, you got to be clear. It's either not available or in transit.
So the signal behind all of it, and again, I kind of want to push this because I know the messaging was trying to be as specific and black and white as it could while being vague as well and all-encompassing, which is typical government behavior. is the signal purely directed at our marketing efforts designed to capture customer attention, or is it really looking to change behaviors at the dealership level?
I think it's looking for change of behaviors from a transparency standpoint, right? So, to your point, the government said if we need to be very clear on what an advertised price is, something they've never clarified. Now, there are state laws that are very clear on that, but we've never clarified that at the FTC level. So what the FTC said is if there's customer complaints around discrepancy of advertised online versus on-site price or advertised price, then we need to give a clear definition of what an advertised price is. That's it. That's what the letter says. So if I'm going to advertise a vehicle, then I have to have what's known as the dealer total price, the prominent price, the highest amount the customer would pay for that vehicle. And that number includes the price of the vehicle, any allowable government fees or dealer fees, allowable is the key word, government or dealer fees, and then anything that's already on the item, any hard addendums that are on the vehicle. That's what the price has to include. That doesn't mean I can't say vehicle price is $50,000, big prominent letters, that's the highest price, rebates and discounts availables. I can still do that.
Yep.
I just have to make sure my most prominent price is what? The largest price they see.
That a majority of the customers would qualify for.
And then, that's the price they're going to pay.
Yes.
I can't have the customer do math. Here's the price that you're going to pay.
Right.
Here's rebates and discounts available. I can only work the discount into the price if it's available to everybody. So if my dealer does Robertson GM, I give every customer $1,000 off, I can now include it in that prominent price because everybody gets it no matter what.
Because it cannot be conditional based on...
Correct.
Yes. Okay.
But if not everybody gets it, I cannot deduct it from that price and say this is your price.
So a majority of our viewers should be, or are car people. So those type of things would be, I guess for lack of a better term, you can call them add-ons, but we call them addendum pricing, conditional pricing, rebates that don't exist, rebates that don't apply to everybody, every consumer, military, college grad.
Those are the two that everybody abused forever,
Sure,
military and college grad.
The one that became more prominent is a trade-in rebate.
Trade-in or in-house financing.
In-house financing rebate as well.
So so if it's a hard addendum, I've tinted the windows. It's on the addendum. I have to include it in the online price.
That has to be included in the online price. You can't just get to the store and see that it has $2,000 worth of add-ons.
You're correct. That's what they're trying to avoid.
So that has to be...
Can I add a second part to that?
Absolutely.
The second part, the letter is very clear. The online price has to match on site. The part that I'm pushing is the training side of it. Because as the FTC, I can look at prices online all day long.
Right.
But how do I know they don't match on site? Somebody has to call the store or go to the store. So as much as my online has to be accurate, right, and that's easy to do.
Right.
The part that's going to be difficult is the training to BDC, internet sales, phone sales, that when somebody calls the store, they look up online and the price they quote over the phone better match that on-site price, that online price.
And make no mistake.
That's the second part of that.
We have created and we are actively creating something of a whistleblower /
They've actually asked for it.
Audit.
They have asked for it.
Yeah.
Yeah. So
Absolutely.
NADA, I don't know if you were on the webinar, but NADA brought the FTC on a webinar where they had this discussion. And they literally said, right, if a dealer is not following the rules, Chris, who wrote the letter, Chris Mufarge, who wrote the letter, actually said, if you have a competing dealer that's not following the rules, here's the web address for the FTC.
Right.
You file the complaint.
I hope everybody heard that. And again, I want to take two parts.
Dealers have been complaining on dealers for a long time.
And again,
it's not a new statement.
It's not a new statement, and it's prevalent in the Toyota world and some other manufacturers' world that have, minimal acceptance pricing standards, MAP pricing standards. But this is real world to include, not limited to, but all state fees that apply.
allowable government fees.
Allowable government fees, right.
So the only thing you can exclude are required government fees.
Gotcha. So taxes,
Tax, title,
registration.
license, registration. Because a doc fee is allowable, not required. That was the big debate.
Yeah,
right?
For you dealers that are saying that's required and have said that for years, you cannot say that anymore.
Doc
please.
fees are not required. They're allowable fees.
They're allowable fees. So we're going to kind of segue into dealership behavior. Anything else you want to touch on? I might have cut you short on that.
No, we
too,
could spend
Shannon.
5 hours on the letter.
I know
I'm
we could.
good.
And we're going to as we continue to go through this because we're going to reference it as we go. If a dealer, let me ask this question first. Joe Bag of Donuts dealer in central United States, what is he underestimating as far as the power of this letter?
So you're asking me, does the letter have teeth?
Yes.
Okay.
In the nicest way I could. Because we're not allowing, we don't recommend, and we don't want customers to do math.
Agreed.
Right? So the dealer has to know that now he has to do math.
But did you, I don't know if you saw this, but like AutoNation, KBB, TrueCar, they all made announcements.
Yep.
We're changing the way dealers post their cars online to be able to have the appropriate line items to include what the FTC is requiring.
And a majority of website providers have made those changes
Correct.
too. Yes.
NADA is working with all the online providers, all the manufacturers to say, what can we do to make sure to help them to make sure what can we all do to comply? Because we're trying to eliminate any excuse. And I love the role that NADA plays. And I think over the last couple months, I think they've done a great job of managing the letter and the communication to the dealer, working with partners and having that webinar. They did one webinar with the FTC where they took no questions.
Right.
They then brought up a second one, right? And I appreciated Paul Mitri, who runs regulatory and legal affairs for NADA. I really appreciated how direct he was with the FTC on his questions, because they fielded questions from dealers. And when they had the FTC on the webinar, and I'm sure the questions were sent ahead of time, but there were several times where he said, I want to make sure we're on the same page. This is what they do. So we should be appreciative for the work that they did to get some very specific answers to questions that we were debating. Now they're going to come out, the FTC is going to come out with the, frequently asked questions. I'm curious to see what it looks like.
Right.
But I was appreciative for the work that they did to make sure we did get answers to some of those questions, like what is an allowable fee versus a required fee.
Instead of in the first webinar, it was simply hey, this is it, move on.
Correct.
Yeah. What if a dealership says, Shannon, we're just being flexible, case by case? What does that sound like to a regulator, and how do you approach guiding and consulting that dealer?
Okay. So I didn't answer your teeth question. I'm going to try to answer two questions here.
Go ahead. I'm sorry.
No, it's not your fault. I just realized I gave a long-winded answer that I didn't even answer the question. So, not to bust anybody's bubble.
Sure.
But there is no perfect dealer in the United States. The FTC is not, and the state attorney generals, because they have rules as well. They're not on the hunt for dealers trying to be perfect, right? And I think as dealers look at the letter and look about how do I apply or be compliant, nobody's looking for perfection. They're looking for dealers that are trying to do it right, right? So if dealers that are calling me and we're talking about consulting and the website, and I'm looking at how they're doing, most of those dealers I'm having the conversation is, I appreciate everything you're doing. You're trying to be compliant. This is what you get credit for, right? You're not going to be perfect. Nobody's going to be perfect. But if I can be as perfect as possible, I get some protection for trying to be as perfect as possible. Right. So for my dealer that says I've changed my website, I have my prominent price, I've trained my salesperson, I'm doing my own auditing, I'm mystery shopping my store, and I'm doing everything I can, and I miss one. They're not perfect, right? If you miss one, take the corrective action to handle that complaint, because you're going to have consumer complaints. Handle that consumer complaint. The concern would be for the dealers that I think would say there's how many dealers in the United States. The odds of me getting hit are low. I'm going to keep doing what I'm doing. Right? And to be clear, the FTC needs the state attorney generals when it comes to enforcement for a longer conversation than to get into. Right? But if you'll notice, most of the enforcement action is a combination of the FTC and the state attorney generals combined.
Absolutely.
And there's a reason for that due to court cases. Right? So I think not that the FTC doesn't have teeth in what they're doing, but I think a lot of the focus is we have to look at is what is the state attorney general looking at, right? I mean, Alaska dealer got hit a couple weeks ago with $800,000 in fines by the state AG for lack of transparency when it came to online advertising. So from a state attorney general standpoint, that's a lot of where that focus is going to come in, right? We've given them a warning letter. For an attorney general, they now have an area to focus on, right? And now, to be clear, that letter in some states was almost a trash can letter, because in some states, what they told you to do, you needed to do, was pretty much state law anyways.
Right.
Right. So in some states, this is what we do. We're good. But and I'm going to call out states. I live in Texas. This is going to be a shock to Texas. Texas does not have clear state laws when it comes to online advertising. Right. So for a state like Texas, Louisiana, Florida, we have states where this is going to cause a major change or shift in how the dealer handles their competitive market in online advertising.
How they're drawing customer attention.
Agreed.
Yep. So again, I want to illuminate your prior answer in a separate conversation, but consistency is key. So if you can show, paraphrasing what you're saying, if you can show that you're consistent, at least in effort to be compliant, that has weight and will carry the water.
Agreed. Now I have to have a written process.
Yep.
Approved by legal. I have to implement it. Everybody has to be trained. I have to audit and enforce it. So if I'm doing that and I'm not perfect, that's running a business.
Defendable.
Yeah,
Yeah.
Nobody's perfect.
Defendable is key.
Absolutely.
But again, the low-hanging fruit in all this is my online price includes, I'm just going to literally, I'm going to do it no justice and just paraphrase. Our online price includes our admin fee. Now, and this is the top price you're going to pay, no tricks, no games, as far as what we're posting out there for digital, for clicks, not bricks.
Oh, advertising. So let's be clear. Advertising is very loosely defined. It's just not online. It is online. It's newspaper ads. It's radio. It's print. It's oral representation. It's also the employee's social media account.
I was going to ask, does it include email and social media?
It does. A dealer is liable for what an employee posts on their personal social media page. If on their page they're listed, if I'm listed as an employee of Robertson Toyota and I'm posting on behalf to bring business in, a dealer is liable for those posting. I mean, one of the things we added to AFIP and ADCO once this letter came out is we added a job description for BDC sales and everybody to understand what they can and cannot do online. So we have a job description that they acknowledge it. We now have a training module that teaches them what they can and cannot do, right? We immediately added all of those to our platform.
That's perfect.
And that acknowledgement is the dealer's defense.
There you go. Now the dealer has to audit to it. And one of the things we've added to our auditing process is a review of the dealer's website, right? And maybe some mystery shopping. If I call in, what matches? So if I call in and hit your BDC department, right, and we do a pre-audit and find out you're not giving me a price online, when my auditor sits down with your dealer principal, they're going to talk about it.
So we've discussed, Shannon, at length, to some extent, the entirety and the scope of the dealership that we're governing. We've talked about salespeople that use their dealership name on their personal Facebook, all the way up to the macro side of things, which is just advertised price. What are the regulators really focused on? Are they looking at this and adding more emphasis on any one of these topics, whether it be hidden or misleading pricing, add-ons and junk fees, disparity and inconsistent treatment, or are they literally looking at weak documentation of consistency? What are they really focused on when we talk about the FTC letter?
Well, I think the focus is on they want consistency to what the customer experience is, in my opinion, right? That's one of the
I hope
things they're
so.
looking for. I'm hoping. I agree. I hope so as
I hope
well.
so.
I mean, I don't know what goes on in their head. Sometimes I understand. Sometimes I have no clue what's going on in their head. But I think one of the things they're going for is consistency of customer experience and transparency. So those are the two main keys there, right? And the FTC is not saying you can't sell addendums. They're not saying you can't do market value adjustments. They're not saying you can't do any of these things, right? They're not saying that you can't charge for things. They're just saying you have to be consistent and transparent on what you're charging. And I think that's a fair statement from a customer expectation standpoint.
Agreed.
All right. What puts a dealer on the map are consumer complaints. A consumer can go to the Better Business Bureau. They can go to the state AG website. They can go to ftc.gov, whatever that website is. That's where they file complaints. That's what puts a dealer on the radar, right? And I'm going to change my statement. There's a stat quoted that over 50% of audits performed at dealerships at the federal or state level are driven by consumer complaints. And I have customized that to my wording as it's driven by unresolved consumer complaints.
That is a beautiful clarification, because again, time is the killer of all things. Time is the escalator and the killer of all customer satisfaction, period, end of story. So when we talk about unresolved behavior, obviously that isn't limited to any one of those sections that I just asked you to clarify and pick. It's all encompassing to customer behavior. Are we focused on a happy customer, or are we focused on simply trying to cure pricing variability?
Well, dealers are focused on competitive edges.
Right.
And they should be. This is a competitive environment.
Absolutely.
Right. And I think we can go back to how we started, the podcast, right? Are we focused on the price of the vehicle? Are we focused on the customer experience? Where's our focus? Right. But if a dealer's focused on the competitiveness from a pricing standpoint, right, then that's the area that they're focused on. What makes me more competitive? And I think dealers need to look at their website, even under the new regulation, even under the new letter, sorry. So even under the new letter, dealers need to look at what their websites have and say, does it lead to consumer confusion?
Beautiful.
So
Beautiful.
do you think, and you've talked about this somewhat from a political standpoint, which we're not a political podcast and I don't have an opinion that matters, that if there is a regime change in 2 years or 3 years, whatever it is, that A, the CFPB could be more part of the FTC, and B, the focus could go beyond all of the car advertisement pricing right now into our sphere, let's say F&I products. We talked about this a few minutes ago, that it would be next to impossible to do it. Are there enough true, real reasons not to have to go down that rabbit hole with them?
I think there's other areas that they're going to focus on. I don't think though. I mean, if we have a regime change, remember when a president's in charge, he chooses the commissioner. They go through congressional act, they get approved, but the president says, "This is what I want you to focus on." I mean, the reason why we don't see a lot of disparity at the federal level in terms of enforcement, it's an area that they're not focused on, right? So the president's going to provide direction on what the focus of those agencies need to be. And under the Trump administration, there is a focus on transparency when it comes to online advertising, right? And if StubHub, was it StubHub that got fined?
Yeah.
Mm-hmm. And when I book a hotel in Vegas, it now tells me included are the resort fees, right? All of those changes was because of what the FTC said. So it's just not the auto industry that is a focus. It's across the board that this is an area of focus. So I think when the FTC chooses a topic that's not industry specific, then everybody needs to be aware of it, because that's something I think they're going to put energy behind.
And I think
because it's an overly sweeping change they're looking for.
Yes. And I think, again, we can clip this and hit this, but I think eliminating customer confusion should literally be the benchmark of this entire thing. That's what we're trying to accomplish with this letter, in
It is.
theory. And again, hopefully,
Let's go back to your old Foursquare worksheets.
yeah, let's do it.
How messy were those Foursquare worksheets?
Purposely messy, by the way.
Purposely.
Yeah.
And guess what would happen in court? They would, remember those old high school overheads? They would put the Foursquare worksheet up in court, and they would ask them, based on this worksheet, can you tell what the customer agreed to? Right? There was confusion to the consumer that led to a lack of transparency on what they agreed to. Right? Which is why dealers now that we shouldn't be doing Foursquares anymore. But what we put in the file folder is what? A clean piece of paper of specifically what the customer has agreed to on the floor, initialed by both parties. So we have a paper trail that shows a lack of confusion. And we take that messy thing and we do what? We throw in the trash.
Correct.
So, that begs a point. There is still a menu system. It's not a menu system. It's a menu process that was the beginning of menu selling in F&I, in their opinion. I don't know whether he did or did not invent it, but it still exists. In your opinion, would you get away from that and go to what is now considered norm, a 4-column or a 3-column oriented menu?
I would say the dealer needs to look at the options available because there are different desking options and needs to choose the option for them that works best for their sales model, but an option that shows consistency and that documents each step of the process.
Even if it's set up in a Foursquare format.
I would not, if you're asking me, I would not do a Foursquare process.
It's
But
not
what I'm
is,
saying
but
is-
it might appear to the untrained or, the civil eye of, well, this is confusing. I think that's the answer, isn't it?
Correct. So I would support whatever process led to customer transparency and a lack of confusion, where I had true documentation of what the customer agreed to and what the next steps of the process are.
So I want to segue then to
Yeah.
another question. Let's just assume, and most people listening to this are going to understand what I'm talking about when I say 3 or 4-column menu. There is a common.
To be clear, that a finance manager presents.
Right. I'm talking
This
about it's
is not
strictly
a
in the
worksheet.
finance.
Yep.
Correct. We're
Yep.
not in sales.
Yep.
We're in finance. And at the conclusion of that process, if a customer has made inquiries and made decisions, that they print a final menu that the customer is signing. So there's an acknowledgement there. What's your opinion about that first menu that was presented? Does it matter?
So let's be clear. And I have this conversation with dealers all the time. There's not a federal law that governs the menu.
Right.
The menu
Right.
is a compliance document that is used
It's a tool.
to show consistency and transparency.
Yep.
Right. So I think we should track the process.
Because there's not even a legal opinion on how the menu has to be laid out.
You're correct. But there is a lot of compliance opinions,
Sure.
but there's not a legal opinion, right? There's not something that says this is what the law states.
Right.
Right. And that's why, we do auditing and other companies do auditing. And sometimes we give different answers than other companies, right? Because we have a difference of opinion of what needs to be in a menu. And we're very conservative in how we present it.
Which is, again, goes back to our relationship, conservative as we are.
And that's the way that we push it. So I think the dealer should use a digital platform,
Mm-hmm.
right? That limits creativity from a F&I manager,
Mm-hmm.
that allows them to present the products and present the value of their products, that documents each steps of the process. Here's my menu.
Mm-hmm.
I have my base payment. I show my products. This is how the products impact that payment,
Mm-hmm.
right? If the customer chooses to decline, I have a declination page. And then I have a final page that clearly says, here's the products that you've agreed to.
But if he did a multiple menu presentation because he made adjustments for the customer, let's say he showed a certain term of a service contract on the first menu, and they've determined that that's not going to be what's best. Customer determined that. Prints a new one. Do you think it's, again, I'm asking just
No, I
opinion.
gotcha.
Do you think all those versions of the menu, or is just the finalized that the customer bought and acknowledged?
So
is
I don't
important
think I
enough?
need every version or every variant, right? Because because my problem is in court, it's going to actually show confusion when there wasn't confusion,
Okay.
right? I don't need every variant, but I
Okay.
need to have a paper trail process where my numbers match.
Yeah,
Like
the
a
one
digital representation of did you print a menu and at what time mark and time stamp.
Yeah,
did you
date
print it?
stamps,
Yeah.
that's all great
If
stuff.
I'm the customer and I go, hey, I love the VSC, I want the Terra Wheel, I want it for 72 months, and go, wait a minute, that payment's way too high. Can I see what it looks like with just the VSC, not the
or
Terra
more
Wheel?
cash down or whatever.
Yeah, so I don't need to have every variant on that, but I need to have at the end of the day what they agreed to.
And then I would say, to me, it's a cherry on top. Again, not a legal requirement, but a compliance opinion, a declination page.
Absolutely.
Just sweetens everything.
I don't know a menu company that doesn't provide a declination.
They all
page.
provide it,
Yeah.
but then it's goes back to what he just said a second ago, usage. What's the
Yeah.
and I'm like, why would you ever walk away from that? It's so clean and it's so perfect till then.
Well, there's so many benefits to sell from it too that are just absurd.
Oh,
Well, and the exceptions, I mean, I tell dealers all the time, exceptions to the process hurt your process.
Or if there are exceptions, there are no process.
That's a great
Right.
reword on that
Yeah.
statement.
So I've got. I know your answer to this, but I wrote it down as a question, so I want to make sure I walk through this. But I want you to be able to say in an affirmative that yes, this is absolutely correct. There are stores that believe compliance kills gross. There are others that say discipline protects the entire business. Where do you land? I know the answer, just not affirmatively that obviously compliance does not kill gross. It protects the entire business and gross profit therein.
It does. I mean, you're correct. Compliance does not kill gross. And I don't know if dealers will aptly say, I don't like compliance because it this. I think where dealers struggle is the consistency of the compliance.
Right.
Right.
Or turning
I
the
know
other
I
cheek.
I need this, but maybe on this deal I'm going to make an exception.
Right.
Right. You know, and that's where that exposure comes in, is when you start making those exceptions. Right.
And exposure is risk. So
Oh gosh, yes.
in that same vein, this is the question. This is really what I wanted to ask is what is the most expensive lie dealers are telling themselves right now about compliance?
yeah, you better.
I
Take
gotta-
a- take a
I
sip.
got. I am.
Yep,
I think
I'm gonna-
this one.
I might shoot
I might chug it at this
I
point.
might shoot this whole thing too, just to hear your answer.
What is the most
Expensive lie dealers, stores are telling themselves about compliance.
I think we hear this all the time. One deal doesn't save your month, but one deal can break you from a process standpoint.
100%. Well said.
So I think where I find dealers exposing themselves is making exceptions on those deals at the end of the month, making exceptions on deals where they don't follow the process to get the mark on the board on a Saturday night, Friday night, late at night, thinking that that's going to make the difference for where they need to be for the month, but causes them the biggest exposure. I had a gentleman share a story with me where he said, I'm very red flags compliant. I never deliver a deal until I do all my checklist. And he said it was Saturday afternoon, end of the month. I had a deal being delivered. And the gentleman called me and said, hey, I can't get out of work in time to meet the guy at my house. Can we change the delivery to my work address? And he said,
Is this like a horror movie? You know what's going to happen.
but he said I was so caught up at the end of the month at the dealership. I had customers waiting. I needed that deal. It was a good gross deal.
Yeah.
Customers buying lots of products. I couldn't wait. Right. And he said, so I said, what? Absolutely. I ran it by my director. He said, what? Yeah, let's get that deal done. Nobody stopped to follow the process. When you change an address, you go to Google Maps, you do your satellite view, you do all, you check, does the address match? You know his work. Is that the same address? He said, I didn't do any of the things I would have done on a Tuesday, Wednesday, or Thursday. Right. But all I knew is we needed that deal at the end of the month. My director wanted it. We all wanted it. We approved it. That car got delivered to a location where there was an empty lot. Right. And we've never seen the car or a car payment. That one exception exposed the dealer at a level beyond what the gross was.
And it wasn't a $10,000 used car.
It was not. It was a high-end car.
It never is.
And the customer bought a lot of product.
Of course he did.
Because you had to have every level of the store say yes to it, which meant it had to be attractive enough for all levels of the store to say yes.
And he
Because
said
guaranteed that would have been a cash deal. Finance manager would have raised his hand and said, "Hey man, I don't like this one. Let's take a step back."
Well, and the funny part is he said, and he admitted to me, he goes, any other day of the week, I would have never approved it.
You're gonna show us in a second where we go off the rails. You're gonna give me some examples that the letter illustrates. Okay.
Can I ask a question in return before I do that?
Absolutely.
How much do you think these online influencers are having an impact on what we're seeing from a consumer complaint standpoint?
More than you could calculate.
Right? We have people now that are making a living off recording their, and I don't want to give them credit, so I'm not naming.
No, we're going to protect the innocent. That's what we keep saying
But-
about those initials that I won't say out loud.
But they are recording themselves and they are posting the interactions that are not favorable for our industry. And I mean, he does, some of them do 150, 175 cars a month. There's a lot of really good interactions there,
Right.
but those aren't the ones that we see. So part of, and I don't think the FTC is watching social media. They could be, I don't know. But I think that it does create an increase in awareness for consumers
100%.
when they have a similar experience to what they saw online and they are watching one of these influencers that I think drives to some of those increase of complaints.
If you think for a second that legislators that are participating and visiting Washington, representing our state, our district, our city, our whatever, if you think they're arriving at these conclusions based on their shopping experiences alone, you're wrong.
Correct.
Of course they get feedback. Of course, they may not know them by name, these influencers that we're discussing, which again is the entire genesis of the car bar, to rail against that and have real conversations with real car people. If you think for a second that what goes into their calculus to decide what they're going to do in our industry isn't being influenced by those influencers, literally in the name, what they're doing, you're wrong. All these things that we see on YouTube on how to buy a car, all these things that we see on YouTube that paint an ugly picture for their own benefit because they're selling a product that answers one of 10 questions they're creating themselves by influencing the general populace. That's precisely why we are where we are. Everything is public.
It's increasing awareness. I'm not on Snapchat. Snapchat? Wait, I'm on the wrong, I don't know.
TikTok.
There you go. Bunch of old dudes. This is how we know we're all over 50. I'm not on TikTok, but my daughter was, I think she sent me a link where there's somebody on TikTok teaching people how to get out of a car. If you just bought a car
Yeah.
and you don't want it and you can't change your mind, here's what you tell the bank. Right? Tell them the income doesn't match. Tell them your employment doesn't match. Right? So, I mean, there is good and bad with social media. This is a whole different conversation we can get into, right? There's a lot of good and there's a lot of bad from it. But there are people on there making a living off trying to educate. Whether their education is accurate is a different conversation.
Correct.
It's education from their perspective. I guess it's
the efficacy, much less the efficacy of
There you go.
social media is questionable.
It
at
is
best.
questionable, but
100%.
and those influencers are sharing the information from their perspective, right? But you know, we have that information out here now that we didn't have in the 80s or the 90s. So customers are more aware, consumers are more aware now, I think, that they've ever been on things that dealers maybe should or should not be doing and how to report it.
That's an even better segue. Okay. What I was going to say is you're going to provide us what we do incorrectly as dealers. In a second, we're going to talk about some of the examples on what to avoid, and not so much an infomercial, but just kind of where we fall short and what the FTC addresses. We do a bunch of shit great.
We do.
We do. We chase down red flags. We do all those things. I know for a fact I can match that story almost verbatim, right? Just in my sales history as a general manager at Riley Toyota, we sold a Lexus to a gentleman out of the state of Washington prior to COVID. My career was prior to COVID with Riley Toyota. Delivered to the state of Washington. We had driver's license. We had verification of income. We had red flags. We had everything checked off. Every box we thought we checked off. We were going to deliver the car, profitable car, finance the car with our captive, ironically enough. Toyota Financial will come up at the end of the story. I get a phone call from Toyota Financial asking me, Brian, do you know this customer? Can you help us find this customer? They've gone dark. Okay, which is a polite way to say they stopped paying. It for the average person watching a car guy YouTube show, it's somebody that stopped making payments on their car. They made 4 payments. First thing I did was I looked up the Carfax. And I pulled up the Carfax, noticed that they serviced the car once, and then proceeded to export the vehicle to Georgia. Georgia's not a state in this country is what I'm referring to. Georgia, the country, which is a greater part of, it was a black
Russia.
Lexus SUV. It's Russia.
It's gone.
It's gone. Okay. Perfect. So, of course, then we get into the conversation with Toyota Financial. Did you perfect the lien? Did he pay taxes? No, he didn't. Obviously, we were on the hook for it based on our dealer agreement that was signed in the 80s. So, needless to say, we do all, the point I'm trying to make is we try as dealers, the majority of dealers try to do things right by the consumer. Okay. We try to do things right, not just to protect our own and CYA, cover your ass is what that means for the general public again, but we do it because it's best practices. We want to deliver a car to the actual consumer and we want to give them a great experience oftentimes, right? What the FTC is isolating, what they're looking at, what they're trying to eliminate are the bad actors and or inconsistent practices, not to use the bad and good term like we negated early on in the podcast, but they're trying to eliminate customer confusion, which if you don't have that trademark, Shannon, get it fucking trademarked ASAP. They're eliminating customer confusion. What creates customer confusion, not just in the finance office, Stephen, I want you to follow up that with a question after we get done with this, which are where this goes from here kind of question when we're talking about the finance office. What are dealers doing to give us a bad name? Not the influencers. We could talk about that.
What
That's a
are
whole nother,
dealers doing?
Yeah. What did you bring with us? What are they doing to?
So I'm not going to show dealers' names, but
Absolutely not.
I mean,
Absolutely
my
not.
AFIP office has a bunch of dealerships around, and we get mailers around there. And
Yeah.
so we like to collect mailers that are examples of what we consider deceptive advertising. So this dealer sent out a mailer, and they're scratch-offs. These are old
Sure.
school. So according to the scratch-offs, I have 3 money bags that all align. If I look at the prices, my 3 money bags says you win $25,000 in cash. If I go to the fine print, it says order of winning symbols does not match the order of winning prizes. So I scratched off, believe I have won $25,000, but if I don't read the fine print and go to the dealer, they're going to tell me that what it says on the paper is not accurate. The other thing the paper says is I can buy a car for them for as low as $99 a month or $149 down. And they have the fine print. It's $99 a month, $149 down. That's assuming an APR for 72 months. It's at a vehicle price of $6,250. Guess how many vehicles they have on their lot at $6,250?
I mean, we could all guess.
No.
And again,
That's what they're advertising cars they do not have.
they don't have. And again,
Cheapest car was $18,000 on the lot, by the way.
so much worse. So that being said, we're back in 2018. We went from COVID, now we teleported back to 2018. It's just where we're at. We're in a hyper competitive market as dealers, all striving for customer attention. When you, again, I might be on a soapbox here. I'm going to try to translate this to a question because this pisses me off. When you try to confuse the customer on purpose to capture their attention, that is why we got a letter from the FTC. That is why they got involved in our industry to begin with.
Here's what I don't understand. You sent me a mailer that makes me think I won $25,000.
Right.
I come to your dealership and find out I didn't. What makes you think from that experience, my next thought process
I want to buy a car from
is
you.
I want to buy a car from you? Or I come to your store because I want to buy a car for not what, $149 a month, $99 down, whatever the number is, and then you tell me we don't have any of those cars available. I don't understand why they think the customer's going to go, well, then what do you have available? I want to buy a car. And maybe I'm wrong. Maybe
you're not, though. You're not wrong, because you're 100% correct. You are the assumed 99% of the population that would experience that. There is nobody, and there's no salesperson good enough to overcome that objection.
And maybe the word track is, unfortunately, you're credited at a level that you don't qualify for that. But let me show you there's word tracks around anything.
Even more disgusting, right?
I don't disagree with that, but there are word tracks around anything.
100%.
Right? So unfortunately, the car we advertised you don't qualify for. I mean, what's the subprime statement? It's not the car you want, it's the car you need. Unfortunately, the car you came here, you don't qualify for, but this is based on your credit. This is the car available. If you make your payments for a couple of years and come back and see me, I'm going to put you in the car you want. Right? That's the subprime statement. And there's things with that statement you can say, and there's things there you cannot say. Let me be clear.
Yep.
Right? That's the non-compliant way to say it. Right? But there are word tracks. I'll do the compliant one since I did the non-compliant one. Right? Unfortunately, it's not the car you came here, you wanted, you're not qualified for based on your credit. This is what's available to you. As you make your payments on this car and your credit score improves and you reach a neutral trade position, right, then we can look to see what options are available. That's the compliant way to say it.
Right.
But they send out mailers knowing what the frustration is going to be.
I'm going to use a different word.
And so the word tracks are designed, and I'm going to make a terrible reference, but the word tracks designed to cover that frustration. We have this joke in my inner circle as would you know if you were in a cult if you were in a cult? Because because I watch podcasts I watch these documentaries about people in cults, and every level that you move up in the cult is designed to offset your brain going, what?
I'm in a cult.
I'm in a cult.
Yeah.
Right? Like I watched the one about Nexium. Level 3 was why we're not a cult.
Right.
Right? So so the process
but
is...
we are in a cult. It's called the car business.
But the sales
very-
process is
very
designed
cultish.
to do what? Eliminate or overcome the obstacles that you're going to happen. So dealers get away with these because the sales process is designed to now what? Handle those customers that are going to show up with complaints.
But why was it designed that way? The whole thing that makes it...
Because it's a Nissan store that has to sell
I know,
used cars
Nissan
they have to sell used cars to pay their bills.
That's correct.
Probably a terrible statement to make, and I apologize.
Never a terrible statement. Nissan dealers would
I've
agree.
disparaged other brands before, so you're
No, I'm
good.
not disparaging
The
them.
whole-
Unfortunately, that's with the models they have available.
It is
Currently.
their business
It
model.
is their business model is
model.
focused on used car dealers, and this used car sales, and this is a Nissan store.
Let's be clear, though. The differentiation between what we're saying, we are premeditatively creating customer confusion to, in the end, sell a car under false pretenses. Those are all legalese for you're doing something illegal. And again, that's it.
Or deceptive.
Deceptive.
Let's go back to the UDAP.
Let's use
right?
UDAP.
So some of these items their ad is illegal. Their ad is legal. From the standpoint is it has all the appropriate disclaimers.
and disclaimers, yes.
What the ad would be considered is unfair and deceptive as an act or practice. And that's where a lot of dealers miss the boat. Does my ad check the box from a legal, illegal standpoint? Yes. But does my ad create confusion? Is it unfair and deceptive? That's a separate question. Right.
Have you ever been consulted with by some of these ad companies? And I think more of them are secondary-oriented ad companies.
They are.
For a compliance opinion?
I'm very conservative in my answers, so no, I have not. Right. I've had dealers call and ask me, hey, I think I'm doing this. And my comment's always very clear. We're going to be very conservative in our response. Right. And I ran into a dealer that we chose to do not business with, and I will not name, but they asked us to come in. Day one of AFIP training, we uncovered some very deceptive business practices, and we called the owner, and he said, I paid you to certify my people. I don't need feedback. And we came to an agreement that we would not do business moving forward. But one of the statements that was made was, I'm in one of the largest metroplexes in the United States. I just need to sell everybody a car once. And that was literally the business model. It wasn't
A little
about...
short-sighted.
It was, but they're still in business. They dominate. They've been around a long
Sure.
time. I mean, they're in a large area. They sell a lot of cars. There's a lot of social media negativity on them. And guess what? They sell a lot of cars every month.
Listen, we're not the ones that are doing stuff like that are not small dealerships.
No.
They're not unprofitable, productive stores. They are stores that sell cars, right? They're not just out of desperate. This is part of their business model.
It's
Which,
not a
again,
desperation ad, to your
no.
point.
Not at all. So Steve, actually, I'm going to come back to you because I want you to ask this question, and I want you to, am I putting you on the spot? Before we segue into how stores actually protect themselves, how they take a dusty binder called compliance and really turn it into application, right? Which is this is your wheelhouse and powerhouse. You are the gold standard for that. So let's ask this question first. Steve, you were talking about finance. You were talking about the menu specifically and how it should align as far as referencing a pencil, right? And we always talk about a poor pencil as a four square, which for all intents and purposes was why we have the reputation we have today, right? Why we are where we are today.
Today we call it the 3-card Monty.
The 3-card Monty is a different game, played very similarly. With that being said, you were going down the avenue of, and put it into your own words, but I want you to go down the avenue of what we're seeing now on the retail, meaning the car sales side. Are we going to see more pressure, ask it however you want, more pressure from the FTC in the finance space?
Well, I think that's what I was talking about earlier.
Correct.
And I think just the variance. Now, maybe I was too singular in talking just about service contracts because some other things don't have a wide range of pricing models. They're a little bit more consistent. And I think there are other parts of our industry that regulate pretty strongly. Give an example. GAPA is a lobbying organization to work with NADA and other organizations. Just by their name, GAP is what they went into. And I think that was probably a good and positive effort to control pricing disparity, because when GAP first came out, 98, 99-ish, there was no pricing model whatsoever. And I think that it's a good example that the industry does police itself.
It does.
In saying, hey, let's keep control of a necessary good product, not destroy it. There was a point in time where a government agency, and I think it was the CFPB, that totally hurt the consumer with their military opinion on how GAP could be sold and or priced. They weren't.
The fallout on that was crazy.
And it was a terrible, terrible decision.
But they came back and admitted it.
After how many servicemen,
worthy
servicemen were punished because they couldn't buy it for a certain time of time. I don't think
let's
otherwise.
Be more specific.
Yeah.
I think when they made the rule, it made sense to them on a paper process. What they didn't understand was the application of the rule they put into place. Because they never said you couldn't sell GAP to military.
They said, however, we're going to allow it and calculate it as if it affects the APR.
So you'll have a military APR,
right?
MAPR. What they did not anticipate that the banks didn't want the liability of the MAPR, correct, so they wouldn't buy those contracts.
Downstream in building, it basically created a friction that was unnecessary.
It was, because now if a bank wasn't, so if I couldn't sell it to the military because the bank wouldn't buy it,
right?
As a dealer, if I offered it to non-military and then not to military, I violated state law, because state law says you got to offer it to everybody,
right?
So even though the bank wouldn't buy it, technically it was available for the military. They were slow I agree with your statement. They were very slow in the acknowledgement of, maybe this wasn't the right thing. 2 years.
Yeah.
2 years for an overreach.
I agree with that statement. Yeah,
overreach.
I agree. But but this isn't unique to the auto industry, right? I mean, a
He
friend
was
of mine.
ready, shoot, aim.
It was a friend of mine was at the FTC a couple years ago. So the FTC will open up their doors. Lawyers come in and they do like these open forums. And he said that he was at one a couple years ago. Who's an attorney, and he said they were on break, and somebody asked one of the FTC members, who was one of the ones in charge of putting the CARS rule together, vehicle shopping rule, and asked him what car he drives. And guess what his response was?
Toyota.
I don't have a car.
Really?
I grew up in this area. I've never bought a car. And he said the whole area went silent at the concept that one of the people that helped write the rule had never actually bought a car. Right. And we all get hired. I mean, in every industry, you get hired to do a job. You don't have to be an expert when you get hired, right? You learn it, you observe it. So that's not unique to have somebody in that situation. But I think our industry, to understand the difference between the application, you have to have industry experience to understand the application of a rule. And I think where the government misses the boat from the CARS rule, the military rule, isn't that they're not listening to the consumer, is they don't always understand the application of what they're asking from us.
Couldn't agree more.
To me, that's the biggest gap.
To follow up your question, and I'm going to tell me if I'm wrong here, Steve. And maybe this is just me wanting to dig into this more. Finance and insurance, the F&I side of things, kind of has a proactive approach. Kind of, I say, and I use that word specifically because we have relationships with banks, because we have agency relationships, because we have oversight with partners like AFIP, because we have insurance providers actually have oversight and feedback into our industry. We have a loop where we stay pretty consistent with price caps. We have banks that tell us, hey, you can do this or can't do that. You can include this, you can't include that to some extent.
For the most part.
We have some of that. My question is, how much of this, what we're seeing in this new letter, is this going to trickle downstream into finance?
So I'm going to say no from a short-term basis.
Right.
You got to think about it from a government or state attorney general's perspective. I don't want to waste time auditing the dealer if I'm not going to find any fault, right? So the first thing we're looking for is low-hanging fruit. That's the number one thing, in my opinion, is low-hanging fruit. Dealers that have the highest number of complaints. The second thing to think about is, what is it easy for me to do an audit on? It's difficult for me as a government agency to do an audit of product pricing.
Absolutely.
I've got to put a lot of effort and energy into there.
Well, and the states are already regulated in the form of approval. I mean, every single one of those products have to get insurance approval in every single state.
They do.
There is a check and balance.
And in some states, they limit pricing, like Florida. Florida, let me clarify, they don't limit pricing. You have to put pricing on file. Anyway.
Right.
So I don't anticipate them to dive in that. Their biggest area up until the Trump administration was the discrepancy on product pricing when it comes to protected versus non-protected classes. That was the biggest area of focus. And it might come back into the next administration. I don't know. But that's their focus wasn't so much on the product pricing. It was the consistency on who gets pays what. The other area of focus from a product pricing is whether or not the product actually has a value.
Yeah.
Right. So the California CARS Act actually prohibits you from what's called the junk fee, charging for a product that has little to no value. So under the California CARS Act, which goes into effect October of this year, you can't charge for nitrogen in your tires unless it's at least 95% nitrogen. How you prove that, I don't know.
Yeah.
It can be. It's funny. We have a vendor that we work with on it, and when it was first floated out there, the national CARS rule, they were pretty aggressive in getting out in front of it. But it was interesting. That was one that hit close to home because, we've represented it before and benefits and values, and we're not here to sell a product. But, it was interesting how they immediately were in front of California on it.
Let's add two more. Under the California CARS rule, you cannot charge for etch on a catalytic converter if your car does not have a catalytic converter. 3, you cannot charge for lifetime oil changes on a car that doesn't need oil changes. So I'll be candid with you. When I read the rule, I laughed.
Yeah.
And then I caught myself, and I've got a good buddy who's legal counsel for KPA. Him and I have a competing company that the legal counsel and I are best friends. We talk on a regular. We probably share way too much information back and forth. But I called them when I read the CARS rule, and we were talking about it, and we both laughed, and then we had this epiphany, but where we went, holy shit, we're laughing
because somebody did it.
Somebody had to do it.
Yeah.
Like somebody in legislation didn't make it up.
No.
Somebody had to actually do it. Now, in California, there's a rule that you have to offer etch on a catalytic converter. It's a state requirement, right? So I could see how a dealer put it on every addendum and didn't think twice about it. Or did some dealers put it on every addendum not thinking twice about it? Sure. Did some dealers knowingly do it, knowing that it was profit? Sure. Right? Oil changes, things like that. But somebody had to do it for that to happen.
Right, 100%.
Right, and it's funny. We laughed about it for a long time until we realized somebody actually did it.
Make no mistake, where we're at today are all self-inflicted wounds.
Yes,
100% unforced errors.
Yep.
Let's segue into your world, right? Not that we haven't already been in Shannon's world, but we're going to talk about how we move from this theory into playbook, right? We're going to talk about where the rubber hits the road and any other metaphor I can come up with on a podcast in real time. So we're going to take that dusty binder and we're going to turn it into a real compliance game plan going forward. For that dealer or GM or dealer principal or whomever it might be, they're watching this video and they're realizing they're behind. What are the non-negotiables for a real hard-hitting compliance program? And you've touched on a few of these already.
Let me preface. The federal sentencing guidelines state that an organization is liable for the acts of its employees, even if its employees act contrary to the dealer training. So the rules are very clear. Despite all my training, I am liable for what my employees do as a dealer. But they also state that fine can be mitigated by up to 95% if the dealer can demonstrate that they had an effective compliance program. So everything we do is for that 95%.
And the dealer's liable for 5% of the decision, and then they could civilly go after that person, I assume.
Yeah, they can, and nobody's perfect, right? So no dealer's perfect. So there is a 5%. If you do everything right and your fine gets dropped to 5%, then you're just not perfect and you move on. Right?
Cost of doing business.
It is the cost of doing business. But that's, to answer your question, that's why you have an effective compliance program.
So what does that look like? What is that?
All right.
As
So
you recommend?
that's a good question. So the first thing the government says is you have to have a designated qualified employee. Qualified's a keyword.
Okay.
So we call them a corporate compliance officer, but you have to have a designated qualified employee. 2, you have to have written compliance programs approved by the board of directors. You implement those programs. You train everybody on those programs. You monitor those programs. You enforce those programs, and you annually audit and update those programs. That's what an effective compliance program looks like. And the reason why you do that is for that 95%. There's a defense that most states allow called safe harbor defense.
Okay.
And so there are no dealer's perfect. There's 3 things a dealer can do to protect themselves
Against a bad actor. That's essentially what.
Yeah.
Yep.
So there's 3 defenses a dealer has to protect themselves if they're not perfect. And one of those is safe harbor. So if I get audited and the state attorney general says, "Hey, you're doing something that we think is illegal," or let me clarify, violate state law.
Right.
If a dealer's done everything I've said, they can go, "Wait a minute. What we're doing isn't a violation. We believe it's a different interpretation of state law." So the dealer would reply with the safe harbor response. Here's our process. Here's everything we did to be perfect. We have a difference of interpretation.
Okay.
Right? in those situations, if they're allotted safe harbor, they're not fined. They're just told to change the process moving forward. So the first thing it does is it gives them that defense. The second thing it does is what you talked about. I have an employee that's a rogue employee. I did everything I could. I audit, I caught it, I fired them. But you know what? They did harm 25 customers. I understand I'm going to have to pay a little bit of fine. And now guess what I'm going to do as a dealer? I'm going to turn my employee over to the state. I had a dealer, finance director call me, and he said, the bank called me and said, I have a finance director doing something that is illegal that only the bank would have caught. And they're alerting me to it. And they said, if you want us to keep buying contract from you, you have to eliminate this employee because it was that aggressive of an action. And I don't want to say what he was doing because I don't want to give anybody the idea of what he was doing.
Sure.
Because it was very clever, and only the bank did their internal audit. That's why they caught it.
We'll let our minds race.
And with that said, he fired the employee, and then he called the bank back, and then the bank said, step 2, I need you to turn him over to the authorities because what he was doing was an actual felony. We're starting to see more and more dealers turn their employees over to the authorities because that gives them protection, right? Because in the old days, it was the college football rule, right?
Only the coach gets fired?
Only the coach gets fired. The university pays the fine.
Right.
That's the old rule, right? Under the new regime, what we're seeing from more dealer principals that are trying to be compliant is we're watching them turn their employees over to the state. And I've seen several dealers do it. Because what it does is it protects the dealer from any, I would say, from any type of recourse back on them. We did an audit.
Yeah.
We found illegal behaviors. We tried to correct it with the customer, and we turned them into the state. By doing that, I can now tell the state, I've tried to do everything I could and not perfect. I'm not perfect, but now I've held everybody accountable in the process.
To eliminate further litigation.
There you go.
Okay.
And that's a bold move. Let me be very clear.
I've never experienced it. So when you say, and I've been doing this again.
I had a dealer, there's a dealer we work with that literally called the state and said, my employee's doing something that's wrong. I don't want to be liable. Can we work together? And they worked together on mystery shoppers into that store. Now, they told me the experience. We were not involved. They brought me in. They brought us in afterwards. But they literally called the local authorities and said, can we send in mystery shoppers? They had video recorders. But because they were the one that started that, hey, we need to correct this, they were not sued and they were not fined. Now, they did have to do some correction for customers.
Right.
Whatever customer's been wrong,
Correct. They did fix it.
Yeah.
In good
But they
faith,
avoided what could have been a very large fine payout because they called the state and said, can we work together?
We're always at risk of bad actors as dealers, as companies, as everybody's at risk of bad actors. That's just the nature of the game. And I understand the mitigation, the 95%, and I think that's fabulous. I understand having a qualified person running the program, having written policy training and refresher, documentation, audit, complaint handling. It leads me to the leadership accountability side of things. In real time, as you support and as you partner with these dealer groups and these dealerships specifically, along with us, of course, and other agencies involved, but what does that top-down accountability look like, let's say, on a Tuesday morning inside the store?
Well, it's not about the Tuesday morning. It's about how you run your organization.
Right.
One of your dealer groups that I'm going to visit in the next 2 weeks, I love, and I'm not going to name the name. But if I walk into that store, you know where they are. On the wall are their expectations of their corporate area of code of ethics. It's on the wall. When I walk in there in the store, whether I'm in a training room in that store, there is a written code of how their code of ethics, what their code of ethics are. And I know that store, you know the owners, and they run that store based on those code of ethics, right? I've talked to the decision makers. I've talked to the people that make decisions, and they tell me every decision they make is based upon what? Those code of ethics. And that's what makes the difference.
That is the culture.
That is the culture. It is
it's black and white. It's top down.
It's a top-down approach.
How rare is that?
It's more rare than I wish it was.
Yeah.
When I walk into a store and I see customer expectations, code of ethics, things you should experience written all over the dealership, my trust in that dealer automatically increases. There was a dealer in Arkansas that said I had to fire a good friend of mine and my longest tenured finance manager. And he said, it's the only time I've cried at work, is what the dealer principal told me. And he said, I had a finance manager that I've had here forever, personally good friend. We've been here so long together. And he made one decision that violated a code of ethics that every employee has a dealer code of ethics that they're required to carry with them. And he says, every time we do feedback or we answer questions, we pull out the code of ethics. So if somebody says, I got a customer, I'm looking for an exception, we pull out our code of ethics. It's how I manage. It's how my managers manage. It's how my sales managers manage. And he said, the guy here that's been here the longest, dominates the most, everything, made a decision that violated the code of ethics. And he said, I had to let him go.
It's non-negotiable.
He said, I cried. He cried. His wife cried. He says, it was the hardest thing I've ever done in my career. But everything I had built would have crumbled after that moment because everybody at the store knew what he did. And if I didn't come in and hold him accountable to the same standards of everybody else, then everything I built would have crumbled after this. I'll share an experience if you don't mind.
No, go. Yeah, absolutely.
Early in my career at Fidelity, I had a gentleman that I worked hard to get promoted. I was manager. I had somebody that I thought had good work ethic, I respected, and I worked hard to get him promoted to the supervisor level. And for somebody I was good friends with, and we did stupid projects on the weekend. We were both young and poor and building our own furniture together, trying to not cut fingers off. And he was over at my house, and we were building a TV cabinet for him. And he informed me that one of his employees he had slept with. And he was bragging about it. And I said, we got a problem. I said, I worked hard to get you that job. You violated a very strict company policy. You're married, first of all, but you violated the high five you think you're going to get from me is not going to happen.
Right.
And he let it go, and I let it go because I was young. I was in my 20s. I didn't know what to do. And I called Fidelity's good on mentorship, and I called somebody who was my mentor at Fidelity, and I said, here's the situation. And he said, Shannon, what does your personal code of ethics tell you to do? And I joked. I think I responded with the Boy Scout, be prepared, on my honor. Like I gave a funny joke. And he laughed, and he goes, that's funny. What does your personal code of ethics tell you? And I said, what do you mean? He goes, well, how do you make tough decisions? And I said, I don't. And he says, people that don't have a personal code of ethics always struggle when they have to make a difficult decision.
Holy shit.
People that have a personal code of ethics never struggle in that position. So I go back to the dealer. The dealer did the right thing because why? He had what? A code of ethics. So he told me, he said, go home. He said, he said, when you go home tonight, write code of ethics. If you have questions in the morning, call me. And he called me in the morning, and he said, you good? I said, I'm good. He goes, you know what you need to do? I said, know exactly what I need to do. I wrote my code of ethics, and I knew exactly what I needed to do the next morning. And the next morning, I went to my friend, and I said, we're good friends. You got till 5 o'clock. You tell the boss or I tell the boss. But those are your two options. And he questioned me, challenged me, said some not nice things, walked to me at 3 o'clock and said, I don't think you're going to do it. And at 5 o'clock, I walked into the office and I said, here's what I know. It was difficult. I was emotional when I said it. It was a good friend of mine. But I wrote my code of ethics that night before, and I knew what drove me. And I'm going to quote it, and I apologize, I'm going to drop an F-bomb. But the first thing on my code of ethics is you don't fuck with my income. Mm-hmm. You just don't. I have family. I have a young kid. I got a lot of things I'm responsible for. And I'm very respectful to the people in my employer who provide me that income. So if I know of something that impacts my income, I am not going to tolerate it, nor am I going to go down with you. And that was my comment to him. I know something that if it gets found out and gets tagged to me, it now impacts my ability to pay my bills and my ability to provide for my family. And I have, I think, 12 of I've written 12. I don't share them. They're mine. But number one is the one I share a lot for dealers. How many people in our industry can leave their job and go make that same income somewhere else? It's a very short list.
Mm-hmm.
And I'm disappointed at the amount of times we find bad behavior at a dealership that other employees know of, don't report, or tried to cover. Not understanding the impact of those decisions. And I think our industry would be a much stronger industry if we policed ourselves instead of allowing somebody else to come in and do it.
Brother, thank you for sharing that. We could close the podcast on that, but we're not going to. I mean, there is a quote that I'm going to butcher, and it basically centers around the idea, because I'm going to butcher it, I'm not going to try it, that what you allow is your standard. What you allow is the culture, right?
That's a great quote. It's very accurate for our industry.
It has to be, but it's not. And it's the reason why the government is, for all intents and purposes, intervening in our day-to-day. And that's great. And we need to be held to that standard.
We should.
But we should have self-imposed the standard years ago. We shouldn't have the reputation we have today. We shouldn't be swimming upstream in the direction of wanting to create happy and loyal customers. That should have been our North Star all along.
So let me ask the question to you guys. How do we set that standard? We're in a competitive industry.
Right.
How do we show the new standard by setting the competitive mark by winning, doing it the right way?
I think, unfortunately, and Steve, answer this next because I'm going to be real short in mine, is that being an industry guy, being a car guy, I volley that question back to you, not as Brian Jacobson, but as an industry back to you and say, get me there, Shannon. That's why you have the gold standard in our industry to make sure that we strive for that. It's a weak answer. It's a bullshit answer.
But it's what we do. I mean, that's our fight. That's our daily fight is, right, changing the industry for just better across the board. I mean, I want dealers to win. I want finance managers to make a lot of money. I want customers to be treated fairly and ethically and buy cars from the same dealer over. I want the good experience.
Correct.
Right. As a personal fault, I'm a win-win person in any situation to a fault. Right. I'm a win-win person across the board. I always believe there's a win-win scenario. Always. And there is a win-win scenario where, as an industry, we win as a whole. We make good money. Customers buy cars. They're satisfied with our experience, right? But it just comes down to that transparency, consistency, and having a compliant process that everybody follows.
Couldn't agree more. And again, I do believe that there's not a salesperson out there that sets out to disappoint a customer. I do believe that when a GM takes his role, or anybody inside the store, any leadership inside the store, takes that promotion, the last thing they want to do is disappoint a customer.
I agree with that statement.
However, and again, it has plagued this industry. We fall to the standards that we allow that decimate our culture and has decimated our industry. I don't mean to sound negative about it. It's just we've earned the reputation. Let's put it that way.
I agree. And I think where we are now versus where we were in 1980s is a massive difference.
I agree.
I'm going to judge. You made the statement earlier, we're paying for our sins. And I agree with that. I don't think the reason why I think we hit the bottom quartile of trust in the industry isn't necessarily because of dealers today.
Agreed.
I think we're paying for our sins from a long time ago. And the other thing I'm going to point out is if you look at FTC reporting, they don't break out franchise dealers, used car dealers, independent, buy here, pay here. So I think part of the frustration I have from a reporting standpoint is we don't have a true look or a true view of what are the consumer frustrations at each level: franchise, independent, buy here, pay here, right? And you mentioned when we started, I have things on my LinkedIn. I have Dealer Resolve other companies, and this isn't a promotion of a company, but one of the things that Tevis and I created was a software company called Dealer Resolve, where we create a program where dealers can they can accept complaints, handle, respond, and everything through a single software system. So everything's tracked and documented. They can run reports. A dealer can run report most complaints by rooftop, individual type of complaints. We created that because the CARS rule was going to come out. And if the CARS rule had come out, you were required to have a complaint management program. So we created one.
For sure.
CARS rule requires it. You have to have one on the California CARS Act. The other reason why we created it, and one of the things we're doing behind the scenes, is we wanted to track consumer complaints. Nobody really tracks this other than agencies, right? And their information is skewed and not broken down the way it needed. And one of the positive things that we found out of our Dealer Resolve system, we actually changed the name of it. We sold it as a complaint monitoring system. We now sell it as a feedback monitoring system because 70% of the comments are what? Positive. Right. So what we're missing in this balance of FTC complaints, what we're not getting are what? All the good experiences.
All the good stuff. Right.
And I don't think that the government and a lot of the organizations, the influencers, give us a true balance of the pendulum. There are a lot of dealers out there working hard to do it right, be compliant, and make good money and have good loyal customers. I don't think the pendulum is unbalanced as it's portrayed by those individuals and those agencies.
Well, the keyboard warriors come out.
I agree. I think the balance is a lot better now than it used to be. Are we perfectly balanced? No.
Right.
But are we close? Are we closer to a balance than we've ever been in the past? Yes.
Progress has been made.
I agree with that.
We're still always going to fight the keyboard warriors. We will. It's, interestingly enough, Philip has commented on, he's managed the content with what we've done with our podcast, and we appreciate him and support him and recommend him very strongly. And he's been awesome to say, crazy enough, you guys get 70% really positive feedback and 30% of the haters, which is the opposite of what unfortunately happens in most industries. It's 70% haters and 30% positive. So it's in thanks to people like yourself, honestly, Shannon, and some of the other previous guests we've had, being the conservative nature we are. We want somebody with real knowledge, real experience, and a valuable opinion and words for people to share and benefit from. But I don't know that we're ever going to be able to control all of it. It's not possible.
We're not until we start providing our own monitoring, our own reporting.
It's not Belichick, is it? Is it? We will seek perfection, but settle with excellence. Settle. Who was that?
Phil Jackson.
Is that who it was?
I'm trying
Phil
to
Jackson?
remember.
Yeah,
but we're the second largest. We're the second largest purchase a customer makes in their lifespan.
And we're top 10 employers in the country.
We are. So we're always going to be a scrutinized industry, just like the real estate industry. We're always going to be scrutinized. We can't get away from that. I don't want to. Yeah, I want to clear. I don't want to add a caveat to what I said. I meant what I said, but I don't want to be negative in any of that as far as where we go as an industry or how we fix the industry, because I do believe it is getting fixed. Agreed.
I just wish we were more proactive versus reactive. I wish, to your words, and again, we've touched on a lot of these throughout the entire podcast, which is kind of the whole point. But I do believe that if we just strive for happy, loyal customers and we eliminate any customer confusion, again, trademark, Shannon Robertson, what's the date today?
It's going to be a new commission, the ECC.
Yeah. Eliminate customer confusion. I think that should be our North Star. And I think we have a lot of good actors. I hate that word again. I understand we've made that differentiation, but I think we've got a lot of great dealers, dealer groups, and individuals at the stores at every level that strive to not pour cold water on their customer, that strive to respond immediately to issues, right?
Because they're buying an experience.
They
They're
should
not
be.
buying that. And I think that's some of what we need. We need to have a better understanding of what is the customer buying.
And train the experience.
Correct.
No, you're right. It's a top-down approach.
It has to be.
The culture of compliance starts at the top and works its way down.
Correct. System means culture.
And it's daily. It is a daily habit. It's an every deal conversation. It has to be. It's part of your culture. It's part of your everyday decision-making process.
To your top-down statement, if there's a dealer, and there are some out there who absolutely play in the gray all the time, everybody underneath that dealer sees it and knows it, and they replicate it. Oh, it's acceptable up there. He's going to be okay with it, or she. He or she's going to be okay with this. And then the one below that, well, this one and this one does it this way, so I'm going to do it this way.
That leads me to my
Terrible
next question.
example.
Yeah, I'm going to jump on that real fast.
Go ahead. Go right
So
ahead.
when the Arizona dealer got fined, their biggest complaint was we were targeted because we did everything the dealers around us did. We've been here 100 years. All these other big dealer names came on, bought out neighboring dealers, and they started to market differently, and we had to market the same way to compete.
That's
right?
a satire on our industry right there. That is as overarching. Segues to my next question, because this is going to lead into it. In a business that often rewards short-term production, quick fixes, easy cash, whatever you want to label it, how do you keep integrity from just becoming a slogan at the dealership?
Your bonus has to represent what you want out of behaviors. I mean, at the end of the day, there are people that work in this industry because they're long-term, they believe in it. And then there are people in this industry that just know this is a way to provide for their family, and they're very bonus driven. So what we need to do at the end of the day is we need to make sure that our bonus plan is representative of the behaviors we want from our staff.
Correct. Compensate for behavior. 100% true. So what does that healthy dealership, what does that look like when you visit a car dealership? When you visit one of your partners, whether it's on the agency level or otherwise, but specific to a dealership, what does a good culture look like when you pay a visit?
Oh, it's really easy. I mean, we walk in. I mean, I see signs everywhere of what their culture of compliance is. I'm in AFIP. I'm teaching AFIP, and I say, well, here's payment packing. And they go, oh, we just don't allow it. Here's our policy. Here's our training. We talk about markup over buy rate. We can't do that. We have a dealer policy, 1.5 no matter what. I get into product pricing. Our policies don't allow us to do this, right? When I'm at a dealer and they're quoting policies and they're quoting those things, right? Or no, that's a fireable offense. Like when they have the knowledge and understanding of what the dealer does and does not allow, I know that I'm at an organization that's run different than other areas.
Beautifully said.
Right? There are sometimes I'm at dealer, like I know these, before I go to a dealer, I'll ask, what are your policies on this? I'll know what they are. And then I like to ask them in class, what is your dealer policy on markup over buy rate? And they're like, well, we don't have one. And I'm like, no, you do. I've read your corporate policy. But when people don't know it, how can I expect them to follow the process and be compliant if you're not training them on it?
It's by definition.
Or holding them accountable to it.
Dust off that policy binder, dust it off, and start living it every single day. They're going to fall, to your point, Steve, they're going to fall to their, what's allowable is the culture, unfortunately.
One of the groups we work with, they put all their compliance manuals online, and they sent the owner sent the GM an email and said, you guys all have ownership in my stores. This is your compliance manual. Read it, know it, and acknowledge it, and sign off.
And then live it.
I need approval. And there's his comment.
Okay, Spicoli.
But if your dealer gets, great reference, if your dealership gets fined, I'm not paying it. You are now liable for your store. These are the policies. And one of the finance managers or one of the GMs called me. He's like, man, did you know our organization was doing this? I said, yes. I said, what did you do? He goes, I took the owner's email. I put my name on it, and I sent the compliance manual to all the sales and F&I managers. And I said, here's the sales and F&I compliance rules. Read it, know it, and acknowledge it. Because if I get in trouble, you're paying the fine.
Yeah, I'm not paying
not
it either.
Me. But that store is very compliant because it was a top-down expectation, and the accountability is very clear, and the knowledge level is there. but it just kind of made me laugh that it went from owner to GM, GM finance director to finance managers. The sales manager was telling the GSM was telling the sales managers.
That's the epitome
Yeah.
of good shit rolling downhill.
It is.
Yeah, that's all downstream.
And if I'm in that store, like I joke, it's a very easy AFIP class. Everybody passes.
Yeah.
Because everybody understands the rules, the knowledge, what they can and cannot do.
Well, I'm going to speak to the class. It's kind of a little off the a little segue here. The class is not easy. I mean,
No.
you spend a day and a half on Fed, a half a day on the particular state that you're in, and then I've seen guys take as little as an hour to complete your testing. I've seen guys go well over three. Because it's thorough, it's efficient, and it's unfortunately necessary. But yeah, it's not like just show up and it's an open book test.
It's not. Nice try.
Yeah, good try, Steve.
I don't need anybody else to hear that. I mean,
And
I tell
if it
everybody.
was, how did I get screwed on
I
that
tell
deal?
everybody day one. This isn't one of those trainings you simply pass by showing up.
No, but I'm going to complain about one thing.
Oh, I'd love it. Let's
and
hear
you
it.
know, I know you know where I'm going to go as soon as I start saying it.
Let's hear it.
The additional testing you do on ethics, because it's like when I got licensed to be for PNC a million years ago. Why are you trying to trick me on answers? Just ask me a straight question. I'll give you a straight answer. But one of our leadership trainers, he struggled with it.
He did.
And it was because they were ambiguous. The answers some were ambiguous.
So he struggled because he was black and white.
Yeah, right.
Right.
And it ain't black
So
and white test.
It's not. So I'm going to separate my exam, my federal, state, and ethics.
Yeah, that's black and white stuff.
On my federal exam, I do not allow test questions or written to be tricky.
No.
Right.
I don't. The ethics exam, everybody calls them tricky. I don't call them tricky. But sometimes there's more than one way to be ethical and still solve the problem.
Right.
The problem is with writing ethics questions is I have to incorporate that not every dealer has the same policy. So that's some of the ethics questions where I have two right answers is because it might depend on your policy.
Sure.
I have ethics questions on desking. Not everybody desks the same way.
One I remember was you're a finance manager. I'm paraphrasing.
Yeah.
You can help me complete this. And you get the customer in your office and you've gotten them approved for the car loan, but you just know they can't afford this
I
car.
love that question.
It's a terrible question. Every finance manager in the world is going to say, I'm rolling that car because that sales manager is going to fire me if I walk out there and say.
So the question,
What if it's in the ethics section? Go ahead.
So in the ethics answers, so your answer options are A, do you tell the customer you don't think they can afford the car? Do you talk to your manager and say, hey, you've put somebody in a car that you don't think they can afford. Let's have training to the salesperson, right? There's answer options. So the answer, the question was designed to do one of two things. One, we're not licensed financial advisors. I can't sit down with the customer and say what? I don't think you can afford the car. The minute you do that, you've lost the deal no matter what.
Right.
Now, if the customer says, I don't think I can afford the car payment, that's a different conversation.
Yes.
The ethics questions is designed to do, one, be clear you're not a licensed financial planner. Two, you got to give feedback to the manager. Yes, I have a car deal here. I did roll the deal because it was an approved deal. But can we talk to the sales manager? We're putting deals together that are not realistic. That's the answer. Most people go with I tell the customer they can't afford it, which is not what we should do.
Yeah.
And just as another preface to this, it's great that Dave and others, labeled the company financial insurance professionals. But oh my goodness, anybody that listens to this, if you don't pursue what you offer at a sales manager level, you're missing the boat.
I would
agree. So important.
I would say over the last 7 years, we've seen a massive increase in desking and sales managers going through our program.
They're the critical
Because we've transitioned some of the risk in finance to sales and desk. And as we've seen that transition, we've seen an increase in them of those job descriptions going through our class.
I'll say this.
And here's the other part of it. Let me finish, please. Is because after that desk manager throws it into me in my office, that's a funnel. You've kind of put me in a box, and literally and figuratively. And it's like, okay, I have to somehow mitigate anything wrong that happened prior to that getting to me. And I don't want that responsibility as a finance director.
No, but you are the backstop of the industry. I mean, this is our comment with finance managers all the time, because you're right. A lot of this stuff happens before the box, prior to, in the 80s and 90s, the box did everything.
Right.
Not anymore. So now we get F&I managers saying, what if I don't do the book out? What if I didn't do this? And so we have to have the conversation. If you're the one on the contract, you're the one presenting. So if they're power booking at the sales desk and you know it and don't ignore it, you're on the hook for it. Right. So, but that's also why we have seen a massive increase in sales and desking managers going through, is because of that increase of compliance risk.
There should be the prevailing theme operationally from a GM's point of view, owner's point of view, is I need my sales managers to have finance experience. And they look at it somewhat monocularly. That's not a word. We'll stick with it. They want it to be better pencils. They want it to understand bank and terms and rates and all those things.
Agreed.
What you're saying, and what I think really plays as we somewhat close this segment, is you should literally have that experience to have all of the other answers and be able to have all the other experience with what AFIP describes as a whole in that office to be a sales manager, an effective sales manager.
You need to provide the training appropriate for the risk that you're providing to those employees.
Correct.
So if I'm providing my employees in their job description things that put me in risk, then I have to give them the appropriate training so they understand that risk and what they can and cannot do.
Correct. And we've had too many people that have gone from the sales floor to the sales desk, or not had the education that they need in finance at a smaller store and gone to a bigger store as a sales manager and avoided that type of accountability. I would agree with that. We've talked about a lot. We're going to move on to the next section, but we've talked a lot about some of the pitfalls as it pertains to having
I'm going to change my flight while you're doing this.
No, 100%. As we're talking about it, I'll extend this question to allow you the time to do so. If we have talked about all the dark side as far as compliance goes, which we have to some extent in this segment, right, Steve? Is there, and my question to you, Shannon, is simply for a young person looking at this podcast, for listening to us to this point, which kudos to you, who's ever listening to this. It's a great one. Would you recommend them coming into automotive? Would you encourage somebody making that decision to come into automotive?
I love promoting our industry. I love this industry. I love everything about what our industry provides. I love watching people win and succeed in life. And as we started on the podcast, this industry, anybody can go from nobody to someone.
100%.
Right. And I love that. And I've helped a lot of people get into this industry. I've encouraged a lot of people to go into this industry because of the benefit it provides. Right. Now, there's always disclaimers, right? Make sure you find an organization that matches your code of ethics and what you want out of a job. But if you are disciplined and you do this job properly, you can benefit in a way that it's hard to benefit in other industries.
Couldn't agree more.
It is what you make it. There's one person that's going to get in your way of you being successful. You.
Yep.
That's it.
That's 100% true. We're going to move on to the next 3 to 5 years. You've been doing this a long time, whether it be training, compliance, or any other aspects within the dealership. Where do you see this F&I space specific to compliance heading in the next 3 to 5 years?
I mean, I'd be ignorant if I didn't mention AI.
Mm-hmm.
Right. I mean, and not just for the industry as a whole. Right. I'm careful.
I know we tend to be way too apologetic for even referencing AI, but you're 100% right. Yeah.
So I'm closely watching AI and what AI can and cannot do and the pitfalls of it. I know there are some benefits from it, and we're looking at some AI services that we're going to be providing to help with, because we're a full compliance company.
Mm-hmm.
So there are things that we offer that we could implement AI that would be very effective for a dealer. but there are still areas we have to be very careful with when it comes to AI from a compliance standpoint. I don't know if you've seen this, but there's a state that's looking to pass a law that lawyers can't use AI, right? Because what they found is AI was creating fake court cases to be able to help justify the point of what they were looking for. So like there was a lawyer that used AI to do case researches, got to court and was quoting cases that weren't actually cases. They were fake cases created. So there are a lot of good things with AI, and there's a lot of good tools, and it can benefit, cost save. There's a lot it can do. We just have to be aware of where the risk is with it as well. So I think that's the main thing we're watching on our end, is what can AI do and what's the advantages of it with managing the risk of it at the same time.
As it intersects with a dealership and starts speaking for a dealership.
You're correct.
Okay.
Right. I mean, and I don't want to give the company name. I've partnered with a company we'll announce next month that does AI technology. They listen to you in the office. They record what you say, and then they give you feedback based upon what's loaded. It's AI that does it.
Yeah.
I've uploaded all of our compliance guidelines, right? So now they're providing monitoring from compliance based on what we train on, and they don't just give a score on how well you overcame the obstacle. They're going to give you a compliance score based on what we've provided. Do I think it's the perfect solution? No, but it is interesting to see the monitoring it provides from an AI standpoint.
Adding some efficiencies.
It does, and it has a great search option. I mean, you can't tie product to rate. If I type it in the system, it will go through and tell me how many times my finance managers use a statement they weren't supposed to. So because of the compliance information we've loaded, it helps the dealer have more oversight on consistency of the application of their employees.
What blind spot? You might answer the exact same way, and that's fine and that's fair. What blind spot do dealers not see in the form of compliance coming down that pike too?
It's hard right now. I think when you run a business, you get caught up in the weeds of running your business, right? We all run companies, and sometimes we get caught up in the day-to-day life of running our company that we miss some of the bigger picture things. There's been a lot of the FTC letter, the CARS rule. There's a lot going on. There's NADA policies that have been announced. And I think dealers, the blind spot for some people in our industry is they get caught up in the weeds of doing their job, is they're not up to date on what's happening in the industry outside of that job role. I'm in constant conversation with finance managers on, I didn't even know the letter was coming. I didn't even know there was a letter. Like, just the unawareness of what's happening in our industry as a whole. All I'm in finance, I don't need to be aware of these things.
Right.
And I think that's part of the concern, is that if they don't hear it from us or another compliance company, sometimes people don't hear it at all. Right? I tell agencies, that's why I tell agencies, when you do a visit with your dealer, you should sit down and say, these are the hot regulatory trends right now. Right? These are things that should be shared in training class. When I do my weekly sales team or my daily sales finance meetings, I should have one day where I talk about what's happening at the industry.
Right.
Right. There needs to be a greater understanding of what's happening at the industry level, what's driving it, and our impact on how we change it.
Taking that macro and implementing it into the store, at least talking about it, making it known and frontal.
I mean, when was the last time you were in a sales meeting where your GSM talked about industry standards?
It doesn't happen.
Doesn't happen.
So what does modern finance look like in 2028 or 2030?
Technology drives a lot of what we do today, right? I think that as our technology improves and AI improves, I think it creates a more streamlined consistency to the process. I think we're going to see AI involved more in terms of product and knowledge. I don't think it'll replace somebody's ability to actually truly sell a product, but I think we're going to see more companies trying to get into the AI technology and the selling of a product. But I think that's going to be the struggle that we have over the next 5 to 10 years, is how do we balance the human interaction with the cost effectiveness of technology?
And I think, unfortunately, what needs to be talked about too, and I know you probably have this perspective already, but operators and dealers and dealer at large, the dealer body at large, is not the tip of the spear for AI anymore. The customer is. With agentic AI, for all intents and purposes, you can plug into any one of your chat bots or whatever one of your AI tools you're using and say, find me the best deal on a 2026 Ford Explorer. I want the best payment. I want the best terms. Find out what my trade is worth and find out what the bank rates are and all these things. And we don't even know who we're talking to at the dealership level. We don't know who we're responding to via email, whether that is an AI tool and or a live person.
No, once again, I'm going to anchorman my stats, but on one of the groups meetings I was on where we were talking about technology, somebody made a comment that AI use in dealer research is up to something like 20% of all searches, 30%, somewhere in that.
Yeah.
And they said that's almost double what it was 18 months ago.
100%.
And then the number of dealers utilizing AI technology was in like the double digit. I mean, it was a very small percentage, right? So I think if we're talking about the industry as a whole, dealers have to be aware of how consumers are using AI technology to be more informed shoppers, and then how do they take advantage of that from a marketing standpoint?
Right.
And I think what'll change, part of that will be the changeover in generations of dealers themselves.
Oh, agreed.
I mean, because as, you know, whether it's a 20, 25, 30, 35, 40-year-old next gen of our old dealer body takes over, their experience through these times will impact all that as far as an acceleration point. If they were 40, they know what it is. They're adapting to it. They're learning. If they're 25, that's what dictated their life when they got started. So they're ready to continue to lean into it.
But don't you think that's what drove some of the increase in compliance as well?
I would hope so.
Dealers.
I think, you know, sometimes you look, I've said in the past, from adversity comes prosperity. And the adversity of COVID, I can unfortunately name a couple things that were good that came out of them. One of them is the acceleration of compliance and the acceleration of digital. 5 years before that, I would tell somebody, you're going to do this or that more digitally future. That's not the way we do it. We'll get to it. And then when 2020 hits, you either do it or die.
True.
It was that
That's a good
fast.
point.
And so I think compliance rode that same wave, where now, unfortunately, because of, you know, whether it was lack of inventory and all the chips and all the things that caused some of those problems, and then people reactively took advantage of it in the wrong way, they're paying those dividends now. One of the smartest dealers I know 2 years ago, maybe 3, said we better get back to training. We better get back to learning how to sell cars because we forgot. Yeah, because we didn't have to.
You didn't have to. Nobody sold during COVID.
Right, and so there's the positive effect of a very terrible event. So I think that's what's pushed it.
But I get a lot of phone calls of, hey, I'm taking over. My dad's transitioning over. I'm the next generation. And I don't like the statement old school car guy, but I hear that a lot. You know, he was an old school car guy, right? You know, I know there are different things we need to be doing now that he didn't put time or money or energy into. Can you walk me through what you do for compliance?
The only thing I fear.
And we do a good job with that, actually, I think.
We do.
That's one of the things that we impress upon every
I could get some more business from you.
Well, we impress upon it on every age of our dealer body.
I'm just joking.
Of why we're in tune with that stuff. That's a big deal to us.
I'm going to play devil's advocate for a second, because we talked about earlier how the kiss of death is, this is how we've always done it. When you press a next generation dealer with a bad time, you press him with a lawsuit, or you press him or her with a bad scenario, they don't call us. They call dad, mom, dad, whoever ran the dealership prior. And I hope they call you. But oftentimes you will see resistance due to the conservative nature of our dealer body universally.
I get that a lot from our end.
And I'm playing devil's advocate. I know a lot of great young dealers that are like, I'm just waiting for dad to get out of the way and I'm going to change it all. Well, yeah, to some extent that's true, but also you're not, because you're smart and you're going to listen to how we got us there. Listen. Yeah.
It's funny. I don't want to name names, but there's compliance companies that we compete with where I know the auditors. We're all good friends.
Right.
At Agent Summit or EFI Summit, me and Adam Crowell, who runs legal for KPA, we did a roundtable together because we're all trying to promote the industry.
Absolutely.
So I love when companies that compete can join together for unification of what the education. But the other part that we find humorous is dealers cross-check us left and right.
For sure.
Right, and some of the auditors for the other compliance companies will call me and they go, "Did this dealer call you?" Yeah, and they go, Why are they always calling? Why are they calling you to verify?" And my response is kind of what you guys say. We're very conservative, right? So sometimes when dealers get advice from other avenues, they will call us for a cross-check, just like they'll call you for the cross-check.
Yep.
Right? Hey, this is what I was told. Is this accurate? And they don't always adopt what we say because we are very conservative. But I do think there's a positive note for the people we work with that always just want to make sure, even though they might not pay me for all of their compliance services, are we on the same page if we do it this way?
Which I think is awesome. But also, yeah, and that speaks volumes to the conservative nature of dealer at large. I think that certainly does. We're going to move into the rapid fire. Steve, feel free to interject as we go in these deep cut rapid fire questions. Shannon, what is a compliance topic you care deeply about that almost nobody asks you about?
Oh, I'm very open. I don't have an answer for that. I'm very open. I'm an extroverted person. If you don't ask me, I'm going to tell you about it.
Right. I got you there. I think that's a good answer.
That's a great answer.
I mean, I wish a lot more dealers would ask us about training, to be quite honest, because I think we have forgotten. I'm speaking of our industry exclusively.
No, I agree. Like I said, if I'm in a compliance conversation and the dealer doesn't ask, I will bring it up.
Yeah.
There's the answer. You don't get asked to train enough.
That's it. Training. I need more training. I need more conversation about training.
I didn't want to lead you to water, but there you go, and lead the witness. What's one rule or regulation everybody fears that you think actually makes sense once you understand it?
It's not the rule, but the fact that we need to be the disparity on product pricing. We need to have a consistency on product pricing. And there's advantages to that people don't see at the beginning.
They don't understand.
No.
What's a dealership turnaround story you almost never tell publicly but wish more people could hear? Specific to your industry, of course.
Yeah, I mean, we've had dealers that have been fined by the FTC where we've come in, we've implemented changes, and the feedback is, and I can't name names, but the feedback that we've received is why we do what we do. Right?
Why the phone rings.
Yeah, I mean, not just in sales, but employee retention, satisfaction. I mean, just the feedback that we've received from coming in. And a dealer that got fined for what I felt like wasn't doing bad things, just had no written policies. Right. So to come in and do an overhaul, put everything together. I mean, the biggest feedback we get that I love is I actually feel like I'm doing compliance.
I love that. If you could rebuild the F&I model from scratch tomorrow, what's the first thing you'd change?
I'll be candid with you. I don't mind the F&I model.
I don't either.
I wouldn't change if it's done right and properly. I don't think I would change anything. I like how the model works. The only thing I would add is that we don't do is maybe I wish we gave more education on products prior to the box. The amount of research consumers do online.
Exposure to products before the box.
Yeah.
Correct.
Yep.
I mean, customers hit the box and we're not supposed to call it a box anymore.
I know.
Yeah.
Whatever.
But when the customers come to our
Or the car
rectangled
bar.
office.
And dealers don't embrace that enough. We've
They
gone to
don't,
great
but-
lengths in creating libraries. You can do it on a jump drive.
You do.
Library for the dealer and say, hey, look, put this on your website. You're going to benefit from it.
I
And not enough to it.
No, because customers spend, I don't remember the statistic, but the number of hours customers spend online on vehicle price, rate, not once on product. I think we would see a larger penetration on products if we did a better job of educating prior to the actual conversation. I've told dealers before, go buy a bunch of iPads, create a bunch of videos on why these products are good, hand it to the customer
While they're waiting.
While
at
they're
some point.
waiting, here's an iPad. Here, when we get to the box, I know you're in a hurry. We don't want to take 4 hours in the box. They're going to talk about products. Here's some videos on what those products do, and here's the benefit of it.
We spend way too much time protecting the golden calf versus giving customers the information they deserve.
Just educate.
That's all.
Well, and I have what I call the Amazon close. Customers who buy this also buy this.
Yeah.
Right? That's an effective. How many times have you bought something on Amazon and clicked 3 boxes below, not knowing there were other things there?
For the other 3 pluses. They
Correct.
add them. Yeah.
Why don't we do that in F&I? Hey, 75% of our customers who finance a vehicle that have negative equity that carry over by gap. Here's why.
Especially in the increase in this generation that buys protection products on their vehicle purchase.
Absolutely.
That number, I don't
They
want to.
buy it on their phone.
They do. But, I mean, just the numbers, I tell people all the time, numbers sell product.
Right.
The minute you tell a customer, 70% of our customers buy this, I automatically want to do what? I want to buy it.
Yeah.
So justify. You're financing a vehicle, you're carrying negative equity over. When that happens, 75% of our customers also buy Gap. Here's why.
As a
60%
consumer,
of the time
not
it
a
works
car
every
guy,
time. Yeah.
I am a lemming.
Yeah. You'll run right over that hill. I get the reference, old man. What's the most preventable disaster you've seen unfold in a dealership?
Oh, I don't want to quote what the disaster was, but dealerships that are unwilling to track complaints always lead to a disaster. I cannot get ahead of something if I don't know what it is.
Absolutely true.
Right. And there are dealers that have been audited that I've seen that got gone through audits because they did not monitor and they did not acknowledge complaints that turned into much larger issues.
What is one top performing habit that you've seen F&I professionals do that has nothing to do with closing the deal? You touched on one earlier, but maybe touch on that one again or the other.
Yeah, the one I shared earlier, the video I thought was a big deal, but those that build the connection, right? Those that sell an experience and build the connection. I mean, you made the comment earlier, right? They're not just buying the product, they're buying you.
Take the time.
And those people that take the time to build the connection, right? There's a trainer for, Justin Gassman, who I like, who trains, but I always ask the customer, what kind of music you like, right? It's so simple. But in the background is the playlist for the music. I fucking hate country music. I am not going to sit in an F&I office and listen to country music.
Right.
I'm just not.
Yeah.
Right? It's with the passion I don't want to put into words.
Be a human, not a salesperson.
So if I walk in there and you got country music, I want out of there as fast as possible.
Yeah.
It does. It is nails on a chalkboard for me.
You've shared a little bit of this, and thank you for doing so. But what is one thing about you or your business that nobody asks you, but you wish they would?
I always joke, we've been around since '89, that we're the best secret in the auto industry, right? I don't have a sales team. I really don't have. I don't have marketing dollars. We are a bunch of people working their ass off to grow the industry, to make the industry better. And I wish more dealers focused on the value of compliance, not so much checking the box, right? Not about what programs do you have, is what's the difference in what you do versus everybody else, not just what are the programs.
Before we let you go today, Shannon, give the audience a practical finish. If a dealer, GM, finance director hears this today and wants to take action in the next 30 days, what are the first 3 things they should do? And it's okay if the first one is call me.
Well, one, you've got to put together an actual compliance program, right? I would say, one, you got to acknowledge that you got to make changes. It's a top-down approach. I think you bring us in to help you create that top-down approach. You use us to implement it, monitor it, and enforce it. That's what you need to do in a 3 thing. And it's a lot. I understand it's overwhelming. One of the things that we offer that different than anybody else is, one, we offer a training on how to be a compliance officer. You have to have a compliance officer. You don't go hire a compliance officer that's trained. You tap somebody on the shoulder. We're the only compliance company that offers compliance officer training on how to actually do it. 2, we actually have a checklist that teaches a compliance officer how to do their job. If I teach you how to be compliant and you go to the dealer principal and say, here's 100 things I need to do, you've just lost your job. We span it out over time, so it's a step-by-step process on how to be compliant over the long haul. That's what they need.
Perfect. Last one, I swear. For the person listening who wants to build a real career in this business, which we all uniformly said we recommend our industry, of course, but he wants to be profitable, durable. He or she wants to be profitable, durable, and respected. What's the one piece of advice you'd leave them with?
Figure out what you're looking for in terms of, you need to have a personal code of ethics, and you need to find an employer that matches to your style. I'm going to add 2 to that. Be okay with the word no. I love the word no. And too many new people in this industry don't know they don't understand the power of the no. And so much good comes from a no. And I wish we taught more salespeople, no is not personal. It's not no against you. It's the first step to you learning how to overcome obstacle and sell a product.
I love that.
You know, he just explained why Formula One drivers and car guys have hot wives. We're not afraid to hear no.
No.
Wow.
I was at dinner with some people the other day, and they were listing the car people they knew that married far outside of their talent. And somehow I ranked second on the list, which I don't know if it was a compliment or not a compliment.
Well, for your wife, that's a compliment.
It was a compliment for her. For
Right.
me.
Louise.
And then somebody else goes, in what other industry do men find wives that are far hotter than their husbands are attractive?
Yeah.
And somebody goes, it's the car industry. It's why we're good at selling. If we weren't good at selling, we wouldn't close those deals.
That's it.
And that is the purest form of a sale. And that's a perfect place to close out our podcast.
Shannon, thank you.
Thank you, guys. I
The
appreciate
content,
so
the
much.
time of this one is far beyond anything we've done up to now. And there's some pretty prolific people have been here and a long list to come. So hopefully they'll continue listening and finding some great information. We appreciate your time.
I really appreciate the time. I enjoyed this. This was fun. Thank you.
Thank you so much.